All right, let's get this going. How's it going, everybody? My name is Antonio. What is this? Lighting for ants? That seems about right. Yeah, my name is still Antonio. I'm an aspiring grill master. As you know, this is probably the weekend. I don't know what this is. Probably Saturday that you're watching this if I get this out on time. It's going to be a busy barbecue this week. Only four companies, but four companies that are very interesting, at least from a geological standpoint. And we're mostly looking for gold and copper in this one. Kept it simple, no weird stuff. I'm not that kind of gentleman, okay? But before any of that, I want you to know that at Resource Talks, we don't hate you. And therefore, you should know that I have no idea what I'm doing. And although I now finally have a paper win that I would like to brag about, I haven't sold off yet. Okay, so it's only a paper win. I still have never booked any serious profits in this sector. Hence, I should not be considered any type of authority here yet. Well, believe me, I'll let you know when I do. When I do think I should be considered an authority, which is potentially a couple of millennia in the future. Anyway, different topic. The fact that I'm grilling these CEOs doesn't mean that I'm buying their stocks, though, and it by far doesn't mean that you should blindly do so either. Awalé Resources in particular is both a shareholding of mine and a paying client of Resource Talks. So to err on the side of caution, just look at this program like an advertisement and nothing more. Okay. Matter of fact, a lot of these companies have active marketing campaigns, so you're gonna see them on a lot of interview channels, but a lot of people interviewing them don't want you to know that. Again, I don't hate you, so I do want you to know it and be aware of that. And while tens of minutes of research might or might not have gone into this, and while I don't share the questions up front, nor do I give the company's editing rights, I should still be considered biased. So just look at these conversations as what they are, which is, well, conversations. Okay, there's nothing more than just conversations, general and impersonal, private conversations between two talking heads on the internet meant as an advertisement. That's really what this is. So if you don't enjoy losing money, you should head over to setterplus.ca where you'll find the company's official filings. You want to read them, you want to bake them in the oven, take them with you to work, eat them for lunch, do whatever, as long as you've gone through the MD&A, the financial statements, the management information circular, and the NI 43-101 compliant technical reports, at least those. And then you want to talk to a professional investment advisor before taking your own decision in the end, because the mineral exploration, development, and mining industry is among the hardest industries to profitably deploy capital in, as there are many risks that are visible and not visible to the naked eye. And you will lose all of your money if you don't do enough research. And the people running these companies, they're literally also running around the world looking for hidden treasures, right? So it's in their nature to talk with forward-looking statements and be optimistic and refer to uncertain events that may or may not happen in the future in a way that makes you feel like they're a soothsayer, but they're not. None of us are. So please just don't blindly rely on any of this. All right, that's it. That's it. I'm already half asleep. Trying to wake up here. There's 4 hours or so to go through this. So let's kick it off by traveling to the far north, if that's what I can call it, for the first barbecue, which will be with Graham Downs, president and CEO of Cascadia Minerals, a relatively young copper and gold company with assets in the Yukon and British Columbia. Company is listed on a TSX-V under the ticker symbol CAM, so that will be CAM, where an average of about 26,000 shares trade each day, with a 52-week high of 43 cents and a 52-week low of 18.5 cents. With a market cap of about $7 million and about 37 million shares outstanding to date, this is a 19-cent stock. There are 1.25 million options and 12.25 million warrants, resulting in about 51 million fully diluted shares. Now, this company got, I said it's a relatively young company because it got spun out and listed on a TSX-V only in July of last year. And with that spin-off, Hecla retained a 19.6% ownership, and BARIC is also a legacy shareholder here with a 7.5% position, and Michael Gentile owns 6.7% of the company, with about 4% of it in the hands of management and directors. According to the last financial statement, which is dated September 30, the company had $3.2 million in current assets, mostly in the form of cash, and about $900,000 on the current liability side of the balance sheet, mostly account payables to non-related parties, and also no long-term debt, of course. The same financial statement tells me that the company spends on average, or spent actually on average, about 110 grand a month on corporate and administrative expenses, while for the 9-month period in 2023, they spent on average 350 grand a month on exploration and evaluation, which means that G&A is less than 25% of the overall cost here. And within the exploration expenses, drilling itself, so dollars in the ground, makes up about 27%, while labor, surveys, and a helicopter take up other relatively large chunks, although smaller than drilling. Since this financial statement was published, though, the company has announced an effort to raise capital, specifically $1 million at 18 cents for the non-flow through and 20 cents for the flow through, with a full 2-year warrant. That's a 20-cent warrant on the non-flow through and a full 2-year warrant at 30 cents on the flow through shares. So please head over to the company's website as well as setterplus.ca, though, to look at the most up-to-date numbers by the time you're watching or listening to this, because again, this is an active company. They spend money, they're raising money, stuff happens, things change. Accounting aside, though, as exciting as that might be, there's two projects to talk about here, both on the west coast of Canada, I suppose, again, the Yukon and the BC, and it's the Yukon where the flagship property is. I'd call it southwestern Yukon, but you can argue about that. And now this is a 117 square kilometer land package as of recently, because they increased it. And the first drill program for Cascadia showed 116 meters of 0.3% copper and 0.3 grams per ton gold between, let's call it about 350 to 470 meters of depth. Although relatively deep, this is drilling. This round of drilling reached only sodic and propylitic alteration, and so not the typical potassic alteration that you would typically want to see, suggesting that or being in the porphyry zone. And well, having reached the sodic and a propylitic alteration, that suggests that if there is a porphyry source, it is somewhere below this, and it could be rather deep. But the hopes are that it will also have better grades with it than what I just mentioned. Luckily for me, I've explained at least a couple of times, or at least tried explaining what a copper porphyry is in barbecue terms, so I don't have to do it this time. But alteration here is sort of like, I think of it like breadcrumbs leading to the main course, and so the sodic and the propylitic alteration are kind of like appetizers before eventually getting to potassic, where hopefully the porphyry is going to be. So as far as I understand it, after that hole was drilled, indication was given that the source of the porphyry mineralization that Cascadia theorizes about could be near, which is why they staked additional ground and are going to follow it up with some deeper drilling in 2024, hopefully starting in early May, depending, of course, on weather conditions up there. There are two other earlier stage projects in the Yukon. They're called Rosie and the Sands of Time, both in kind of in the same range in terms of size. So that'd be 60 to 70 square kilometer range. So not huge. There hasn't been any recent drilling there, and as far as I understand it, none planned for the near term. So I hope to get an update on those two further on in the conversation, though. And then on to the one in BC. That's where the PIL or the PIL property is. That's in the Tudagun region. It's a larger land package, so it's about 150 square kilometers. And this is close to Thesis Gold's Lawyers project, and it's targeting comparable epithermal veins and porphyry mineralization. The northeastern portion of that project was walked last year, if you will. So chip samples have come back showing a few interesting potential targets, with Cascadia is now matching those targets with historical drill targets that were shallow, as well as IP surveys, as well as a 2.5 by 2 kilometer geochemical copper, gold, and moly soil sample. Again, all of this is supposedly going to be used to define drill targets for a 2024 drill program. So this actually might be a good point for me to start shutting up, Graham, and sort of welcome you into the conversation. Maybe just sort of kick it off with the Catch property and what you've drilled there, because if the mineralization you found was found mainly on the IP anomaly, as far as I understand it. But again, you only drilled into the sodic and the propylitic alteration. How are you going to approach 2024? Like, what techniques are you using to look for the potassic alteration here?
Yeah, no, that's a great description. I kind of like your breadcrumb analogy. You know, I kind of think of it as, in a perfect world, you've got a perfect porphyry round, and you've got a core, and you've got the outer shell. Like, you know, where are you in that porphyry? And I think you got the right idea there. I think the key thing is that those are the first two diamond drill holes ever drilled on the property. So I think that's a key piece to this. Is it's very rare to actually get the core of a porphyry on your first 10, 20, 30, 50 holes. So we're very fortunate that we've actually hit the propylitic, and we're having the kind of grades that we have already in our first and second hole. So it's a huge advantage to at least have hits at porphyry. But when we are seeing snips of the potassic through it in those holes, narrower bands where you get up to 1% copper and 1 gram gold, which is kind of what you want to start seeing. So we're very fortunate we have snips of that. And where those 2 drill holes were done was on one section line. And then the drill, we were fortunate to leave the drill overwintered on one line over, almost 300 meters away, on another IP anomaly, which is as big or bigger than the IP that we drilled on in the first 2 holes at that diorite zone. So the drill's sitting there. We have a very good technical team. We put that together. We've hired a fellow named Alan Wilson, who is a porphyry expert, works around the world, and our own technical team got together. And it's you don't want to overthink these things sometimes when you have a bigger IP anomaly just 200 to 300 meters away, and the drill's sitting there. It's a pretty obvious place to start. So, and it's nice that the cost of getting started this year will be quite low, because all we have to do is fly the engine in and start it up and drill. So, and we'll drill kind of back towards and under our discovery hole. It's pretty straightforward.
Okay, so you're gonna continue that the hole where you found mineralization between 350 and 470 meters. You're basically gonna continue drilling further away from that. Is it a wedge? Do you continue in the same dip? Where do you drill to?
So the actual drill pad for the next hole is 300 meters away. So it's actually going to be quite a ways away from that discovery hole. But we will drill it back towards that hole. And there's going to be a lot of room in between those 2 holes. And porphyry typically are bigger, and you want to be able to demonstrate that this thing has some size.
You said that you left the drill on site. Is that your own drill? Do you own it, or how does that work?
No, we have there's a drill contractor in Whitehorse that we use, and they have numerous drills, and they're happy to leave it over winter for us.
Oh, okay. So you're not paying an extra for it or something like that?
No.
Oh, okay, sure.
No, they're happy to have the business. Yeah.
Right. What else? Right, because you're saying this is 300 meters away. Basically, what I'm wondering is how did you guess where to go and put it? Like, is it a geochem or a mineralogical markers or something that led your way there?
It's the geophysics that have chargeability anomaly as bigger than the section where we drilled our discovery hole. So it's geochem and primarily because we know that the geophysics work for the first hole, and we have a bigger anomaly where the drill's sitting now. So it's pretty straightforward.
Why I'm asking that after what you told me previously is because you said that the geophysics worked, but they didn't get you into the potassic alteration. And hopefully this time you do want to hit the potassic alteration with the higher grades of copper and gold. So, I mean, if the geophysics led you to where they led you last time, what are you doing differently this time to sort of ensure more success, basically, is where I'm coming from.
Well, I mean, geophysics isn't a perfect science, and it's not going to tell you necessarily the difference between potassic and propylitic necessarily. So you just these things you just actually have to drill them. There's no silver bullet that's going to tell you exactly where to go. You need to get a number of holes to start being able to vector in to see what the alteration in that hole is. So we're going to learn something from stepping out 300 meters. Are you going to see more potassic alteration? Are you getting into the hotter parts of the system? Or are you getting cooler and getting away from it? You know, these things aren't always perfect. You can have your potassic, it can be tilted, it could be faulted off. There could be numerous different situations. So it's just, we know that we hit mineralization that was correlated well with geophysics on the first one. And we have very nice geophysics on the next line over. And I invite you to take a look at our website. We've got a really nice figure that shows that that next line where we're going to drill, and it's a compelling target. So we're going to learn something, and then that will direct the third, fourth, fifth, and sixth hole. So yeah,
You're bringing up a good point here, because I'm trying to understand how complex of a system we're talking about here as well, given the silicification and brecciation that you're encountering there within the propylitic alteration. So what can you tell me about the spatial distribution or the intensity of the alteration signature here so far?
So there's a couple things there. Like we're focused on what's called the diorite zone, which and you'll see that there's two zones. There's a main zone, and there's a lot of surface mineralization, but that's 2 kilometers to the north. And
Hmm.
then where we made the discoveries down at the diorite zone, and there's not as much surface mineralization that you can really feel out there. So um, the main zone, we drilled 3 holes last year, and we didn't find the source of all of that mineralization. So that's still a complex situation. We don't, and there is breccia up there. It's also higher in elevation, so there's a chance that you're higher up in these type of porphyry systems or adjacent to it. We just don't know yet. Again, it's pretty early days, but find we did drill the discovery hole down at the diorite zone. There's less surface mineralization, and again, there's only 2 diamond drill holes on it, so we're very early in learning about um, the system. And you're absolutely correct; these things are never exactly like anything other. It's going to be its own thing, and they're always complex. They're never easy. And I mean, if it was, then they'd be being found everywhere. So we're just excited to have hit really good mineralization. Like that first hole is the open pit resource grade of the Red Chris deposit in BC. You know, it's a little
Hmm.
bit deeper. We understand that, but we hit that on our second hole. Um, so we're very fortunate to have a great head start. We just need to figure it out, and that just takes drilling.
Is this the same lithology though as Red Chris or Galore Creek?
It's a really good point. It's so Red Chris is in what's called the Stickeen terrain in British Columbia, and
Hmm.
that Stickeen terrain goes up to northern BC and it actually goes right up into the Yukon. And we are in that same package of rocks, and we've dated are the rock package that we're in that's within the range of the Stickeen terrain that Red Chris and some of those other deposits are
Hmm.
found in. So yeah, we're in very prospective package of rock, that's for sure. And if I could, we've taken that. Nobody's ever looked in the Yukon systematically in that Stickeen terrain, and it's only been really recently identified and more well defined by the Yukon Geological Survey. And we've done quite a bit of regional work up in the Yukon in that Stickeen terrain last year, and we look to expand on that because the fact that I've never seen so much copper gold mineralization at surface in like almost 30 years working up in the Yukon. It's just incredible that no one has found this before. And if we if well the prospector found it, we optioned it off him. We had known him; he worked with us before, and he brought it to us. And he found it. We optioned it. But if you can find that in 2023, there's got to be a lot more in that 16 terrain, and we're going to be aggressively looking for the low hanging fruit in that 16 terrain because there's a lot of real estate to look for more of them.
Hmm.
Yeah.
How come though? I mean, how come nobody looked? I mean, you fly geophysics on this, you drill it, you find something. I mean, it doesn't. I don't want to diminish it, of course, but it doesn't sound like rocket science. Why are you the first one to come up with this?
It's a great question. It's really the prospector. I think Yukon has never really been known for a copper district. It's most of the copper has been found northwest of Carmack, which is in central Yukon, and there's road access there. So everybody kind of stayed around that area. Nobody had really looked southeast of Carmack, and nobody had really understood the Stickeen terrain that well in the Yukon. So there was never a real push to it. And secondly, it's actually it's not steep terrain, it's just very vegetated. So it's not easy to get into that area of the Yukon. So you can't, most of the Yukon you can fly around in a helicopter and be able to land almost anywhere. Here, you can't. So it's very challenging. And that deters a lot of people from looking. And also, the Yukon Geological Survey does regional silt samples over years, and it's in different years, so you don't have people going back and looking and following up on any of those anomalies until those get done. So it's an underexplored area. It's difficult to get in, and that's the opportunity.
Hmm.
We've already staked a couple properties. the team went out and saw Gossan. It's like, oh, somebody must have landed on that. They went down, and it was a 90th percentile copper stream coming out of it. They're like, oh, somebody must have landed on that. They go down there. They couldn't land on it because, like I said, it's difficult terrain. So they had to land a couple kilometers away, walk in there, cut a helipad for the next day, came back the next day, walked around the Gossan, and came out with fresh copper mineralization. Nobody had ever been there before. It had never been staked before. So we've staked that and another copper property called Max Copper and another one called Millman. So yeah, they can be found. And we have a number of other targets in that 16 terrain that we want to follow up in 2024.
Who was a prospector, by the way, in this?
A fellow named Brian Berkey.
Okay. He still got a royalty on it?
He does have a royalty on it, yeah.
Okay. Is there what's the state of the option agreement or whatever agreement you have going on?
I don't have the exact numbers on me right now, but we've met all of our expenditure portion of that. So we've spent enough money on the project, and we just owe him some shares and cash payments over the next couple of years. Nothing large.
Okay. How much money are you, because you're seeing it's difficult to access. Again, within your exploration expenses, when I open up the financial statement, big part of that was there's something called like helicopter slash wing repair or something along those lines. What's what are you spending money on there? And also, but talk to me how much money you're spending per meter drilled.
So I don't know about the wing repair or anything like that. We don't typically do fixed wing. Maybe that fixed wing would be like just an airplane. I don't
Yeah.
know how much we did last year. I don't know what the guys did. It wouldn't have been very
What's
much.
a
It's
fixed
primarily
wing?
helicopter.
Oh, fixed wing as in it was two separate words which got me confused, but it's a fixed dash wing. I get it. It's okay. Because it was like I thought it was something like repairing the helicopter or something. Anyways, go on. That's how I am. Yeah.
Yeah, I don't think they're. I probably wouldn't have been anything. I think we just put them both in as kind of an aviation kind of thing. It would have been primarily helicopter.
Mm-hmm. Yeah.
Sorry, what was your other question?
What was my other question? Oh yeah, how much money are you paying per meter drilled?
Oh, right. It's in and around all in around $700 a meter.
Okay. But that's for the sort of up to 500 meters deep, I assume. This year you're going deeper, so you're going up into the 1,000 meters, 1,000 a meter, or still staying in that range?
No, not thousand. I think we'll stick around that range depending on what we're seeing as well. Now that we have an eye for what the mineralization looks like, that'd be very helpful. Last year, it's really like we were looking at, like, oh, it doesn't look like there's very much mineralization. And you get it back, and you're like, that's 0.3 copper and 0.3 gold. You're like, wow, it's pretty fine grained mineralization. So to answer your question, it'll depend on what we see, but now at least we know what we're looking at. We have a better eye for what we're looking at.
Right. Okay, fair point. What do you, so as far as I understand, you've drilled sort of from one side and then now you're moving 300 meters to the other side, but you're drilling within sort of the same direction. What's your internal thesis on the geometry and distribution of mineralization here, as well as how that's influenced by the structural controls? Because you're dealing with big structural controls here. How's that internal thesis developing?
I think I just have to go back. I mean, those first two holes were kind of drilled in the same direction. This one is going to be almost 300 meters away going back towards it. We just really don't know. We don't even know if there's a structure in between them. We just don't have enough information. But I think that's what we're going to learn this year quite quickly with a hole that's going to go back towards it. And then we'll have a much better idea of the alteration and mineralization. Like we just don't know.
Hmm.
All we know is, I mean, we know that we were in something. It's like that blind elephant analogy, where are you?
Hmm.
You don't really know. What we do know is we've done the geophysics and we have really nice chargeability anomalies. So there's something. We found mineralization near the chargeability anomalies in the first section line. We have them on the second section line. So we'll do one hole back towards it and then maybe another one going back the other way. Move back to the east and west and just see what we have. And then you regroup and you say, okay, what are we seeing? Well, now you can really start better understanding vectoring of or the style of mineralization, which way it's going. So that's what we're going to find out this year. I think I'll be better able to tell you that after the program.
Sure, but like when you close your eyes and you touch an elephant, you can sort of guess whether it's the trunk or something else. What about in your case? What are you I mean, in terms of the geometry and distribution of minerals, like, what's your internal guess basically on this? What kind of thesis are you working with?
Hoping that with the geophysics we see, it's going to be the potassic is going to be back towards the section line that we're going to be drilling off this year. And we hope that that chargeability is the potassic. That's
Hmm.
what we're hoping. Yeah.
Where I'm coming from with this, or why I'm pushing a little bit on it, is because I'm wondering how do you know when to stop, right? Because if as a geologist, I suppose your goal is to kill targets and then move on to more, better targets if these don't work out. But with this specific target, I feel like it's going to be hard to kill it because you already have something. What if it just keeps coming back as that something? What if it keeps coming back as non-potassic alteration and keeps coming back like sub 0.5% and sub half a gram? How do you know when to stop? When is this target killed, basically?
It's a good question. I mean, like, let's say if our next couple holes out that way, we get skunked on them, then yeah, then we have to probably move on. We've got teams working on the surface up at the main zone as well. But there's so much mineralization coming out of this entire area. I mean, we're seeing mineralization between the main zone and the diorite zone. You just don't see these kind of targets very often. So remember, there's mineralization over a 5 kilometer area here, and we're a couple of years into it, so we're doing a lot of other surface work around it. But to your point, you do have to find at some point, when do you stop? And we also have to do some geophysics in between the two zones, but you have to see what you get first before you make those decisions. But this
Hmm.
is definitely worthy of a number of other more drill holes. 100.
Yeah. No, I can definitely see that. And also what I'm thinking about is maybe more about depth, because I mean this mineralization here, there is mineralization. It came from somewhere. Hopefully, I mean, you assume that it came from a porphyry, but it definitely came from somewhere. But then I'm thinking, what if you're at again 1,000 meters deep and it's not there? And do you keep going? I mean, do you go to 1,200? Do you go to 1,500? And how do you decide on that?
Well, you get people like Alan Wilson in, and you get them out on the site, and you look at the core. There's some very, very smart people out there that have seen these things, and they can tell where you are in the system if you're getting far away from it, um, or you're getting closer to something. And those you get as much brain power as you possibly can to look at the core to decipher what's going on. And if you're saying you're going away from it, you're cool, then you move on and you have to go somewhere where you think it's going to be hotter. Or if you're getting into something hot and the alterations are looking better and better and better, and the potassic is looking good, um, then you keep drilling.
Right. Okay.
Yeah.
How does your proximity to the lake change things within that regard? Does it complicate things in any way, or like how do you even work with and around the lake?
Well, we have to work obviously within the regulations, and we have to acknowledge that the lake is there. And um, first, I mean, what we're doing, the drilling isn't going to affect the lake. You have to find out if there's an economic deposit there or if not, and then you see if you can advance it um, further. You just have to make sure that you take care of the environment no matter what. Yeah,
What's the name of the lake again?
called Claire.
Okay.
And it's a really good point. You know, you just don't know what if there's a deposit there. There is a deposit. Is it underground? Is it open pittable? If it's underground, that'd be great. You know, you can come at it. Is it a kilometer away? Where is it? You know, where is it ultimately? Let's assume there's a deposit there. Where is it? And what would be the configuration of it? I mean, these you look down in BC, there's you're going to have to be some distance away from the lake, no matter what, from an open pit point of view. But those are being done all around the world, especially down in central BC. I think first you have to find out what you have before Um,
Hmm.
you look at that. But the exploration stage, there's no harm to the lake whatsoever.
I'm looking at it. I just looked it up. It says that it's 15 miles long. It's up to 1 mile wide, and it is 350 feet deep. I suppose this must be an American website, but um,
It doesn't
it
sound right. Not really a mile wide at any point. I don't know if it's the right lake.
okay. Maybe it's not the right, but it says it's in the Yukon and it's 85 air miles north of Whitehorse.
Yeah, sounds right.
Yeah. Yeah, 15 miles long. That's a long lake.
It's
But
kind of a chain that doesn't. Hmm. Anyway, I'm not gonna. I think it's a little bit big, but definitely not a mile wide.
okay. It says
Yeah,
up to, so maybe that's just it's also relatively deep. I mean, 350 feet, that's 100 meters, right?
yeah. I don't
Yeah.
know what portion of it is that deep.
That's a deep lake. I don't even think about it that way. Why I'm looking this up is because I'm just wondering, is there fishing? Are um First Nations and other people and peoples in the region using it as a source of food while you're drilling, and how that's going to complicate your presence there?
No, it's absolutely a fair question. There's no salmon in Clear Lake, which is important, but there are definitely pike and some lake trout.
Hmm.
And yeah, there's actually a fishing lodge. We use a fishing lodge, rent that out, and then boat around on little tin boats to get to certain areas, then hike in from where you can get to. So yeah, it's an absolute yeah. We are actually heading back up to Carmack to talk with First Nations again and build those relationships. And it's definitely a consideration that we take very seriously.
Okay, but for 2024, you're allowed to have how many drill pads are you allowed to have this year?
I don't have the permit in front of me, but we have a couple pads that we're allowed to work on. We already have the pad um, built. It's that we do timber frames just to minimize our impact
Hmm.
instead of just digging out flat spots. So um, we have one already set up, and I think we have a couple more that we can places where we can drill from as well. So
Yeah.
yeah,
Okay. I'm looking at a picture with a moose too in that lake. What else in terms of wildlife or anything else that you have to, uh, you know, keep track of, or just pay attention to?
well we have wildlife monitoring procedures. We record everything, and I don't think we guys saw any bears last year. There's
Oh,
no caribou that are you know endangered species or anything like that for caribou, which sometimes can be something you have to pay attention to. So
okay. Good. 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 Well, so what about $1 million in the bank right now left? There's 1 million to be raised now. Um, Given I said 100 and something grand a year in G&A, if that's still what you're budgeting for this year, that's 1 million plus annual corporate cost. How many meters are you putting into catch this year?
well, we quickly got that filled, that announced rate. So we're right now we're looking to upsize that as much as we can. So I'm
What does
trying
that
to be
mean?
conservative, upsize, bring more money in, raise more money.
No, no, I know what upsize mean. I just what does it mean in terms of money? How much more money are you getting in?
I don't know yet. We're just announced it last week, so we're already just over 1 million, and want to see if we can get that up to 1.5 if it's possible, or more.
Right. But I mean, if you're drilling to 1,000 meters deep, in that rate, that's still like a 700 to $900,000 per hole, basically.
Absolutely. We're looking to raise as much as we can, and I don't know. Well, once we should be able to bring those costs down a little bit because we don't have any of the startup costs. But you're right; it's not going to be a 22,000 meter, 2,300 meter program. It's going to be a couple holes, two or three, hopefully. And but we feel very good about that, especially with the discovery that we've made. So yeah, that's kind of the plan.
Okay, so
That way we
but
get the
you're
cost down
thinking,
a bit.
right. But are you thinking raise this money, upsize the private placement that you have going on right now,
Mhm.
drill something, show some grade, get the stock price up, raise in the back of that so you can drill more? Is that sort of the plan?
Absolutely, 100%.
Okay, good. Well, what about BC in the meantime? You said you want to drill there too, but again, it's a money thing, tough market,
Exactly.
low market cap. How do you deal with that?
That's the challenge. It really is. We have to see what we can do, and I think it all starts with focusing on the catch, get going on that. I expect and I'm optimistic we'll get some great results as well. I'm not going to rely on the market being better. You just can't rely on that. We have to focus on what we can do, and that continue drilling at the catch and show more good results and hopefully raise at higher prices and continue to do that. We can do a drill program later in the fall. You kind of need to for that one in BC just because of snowpack there. So that's kind of our thinking right now. Get out of the gate, get up to catch as soon as possible, get some holes going, find more great results, and look to raise again as soon as we can as well.
Hmm. Maybe you can walk me through your attraction, if you will, to the BC property, because I looked at it very briefly, but historic drilling didn't find any mineralization. And it's also in the Tudagon area. That's been looked at extensively. So what makes you think that you'll be the one to find it there, though, given that it's not being found previously and again looked at extensively?
Well, the Pill project is a very large project, and it's been in a company called Finley Minerals for years and years and years. And they focused up in the northwest portion of that project. And you're right, they didn't really find much up there. What we went in, we were a bit more systematic, and they haven't really been doing a lot of work in the last couple of years on that project. They've just been focused more on Silver Hope in a different area, but it needed a bunch of systematic work and actually new eyes on the project. And there's too many targets to talk about on that project, but what we've narrowed it down to is the Hill South project target, excuse me, and that's where we're seeing the most mineralization. They did a couple holes, but they didn't. That Let me back up. We did some geophysics, some shallow induced polarization in 2022, like what we saw on that target, and then we did a deep Titan IP survey, which allows you to look even deeper, and we got a very, very nice response from that. They had drilled some shallow targets and targets off of and around that project, but they were mainly kind of again back in your propylitic, lots of pyrite halo,
Mm.
lots of pyrite, sniffs of copper in it, but they have never tested that deep chargeability and resistivity feature that you'll see on one of our figures there. So
Mm.
we definitely think that deserves a deep hole there to test that target.
You're reminding me of something that I've been thinking about the Tudagon region every night before bed, as one does. The wife loves it. But how do you think the Pill property fits within the broader geological context of the district here? We Thesis Gold is in there now with two projects. There's a bunch of companies around it doing sort of similar stuff. So how does this fit in the whole thing?
I think it's a very fertile area. I mean, you look at Chemis North. I mean, that's how Chemis North was found with Titan IP. There's mineralization. It's fertile. You're going to get different styles of mineralization in the Tudagon. You're incorrect, I think, in thinking that there's all these different areas and targets in that Tudagon area. But it is geologically complex, but that also creates fertile scenarios for deposits. And clearly, you're seeing that with um, lawyers and TDG and AMARC Freeport in the area. So it's just a very fertile area. And yeah, it can be tricky to find things, that's for sure, because um, it's just, I think the easy stuff has been found, but it also doesn't get as much work in that area as you think. There's been ups and downs in over the years of how much activity has really been out there. It hasn't been so recent that whole land package was put together for Benchmark and TGG to really get after it. So, I mean, it's such a great place to work in the sense that it's fertile and you have road access into it. So the cost of doing things is so much cheaper to work out there.
Mm. And but back sort of to where I started it but by asking you, help me sort of understand your excitement behind it, because there's many fertile properties across Canada and across the world, but there's only so many drilling dollars to go into them, right? And so I'm thinking, like you like your Yukon property a lot. That's what you call your flagship property. You seem excited about it. Found mineralization the first two holes, yada yada yada, right?
Yeah.
Why not just do that? Why do you need the BC property here?
Well, you don't. I think you don't. We don't want to just be a one project company. I think, but you're
Mm.
right. When it comes down to dollars, you're going to have to decide what gets done, and maybe we don't do a lot of work on the pill project this year. It all depends. We have to make that. We have to be nimble and make those decisions on the move. And if we are up there early and we're liking what we're seeing it catch, then our dollars will go to catch.
I think there's also an option agreement here that is a bit of a different option agreement than what you have in the Yukon, if I'm not mistaken. What are the details there?
We do have an obligation for the pill this year as well. So that's $1.5 million that we would have to do or find a way to keep that option going forward in 2024. So that is out there, and that would have something that we'd have to consider in another raise before we were to do that pill program for pill.
What's the season for drilling at the Bill property?
Probably July, August, September, October.
So you have to spend $1.5 million by October. If you start drilling by early May in the Yukon, you're gonna have your results out by June. Let's say everything goes as planned, best case scenario. You have it by the end of June, let's say mid-July, just to have a margin there. And then you have to organize a capital raise that we're into August. So you basically really have September, October to drill in BC if you can raise the stock price and then get money and then get into drilling into BC. Does that sound realistic, or do you think renegotiating the option is a more viable scenario here?
Uh, Both of those are viable.
Hmm.
We could do either of those if, and we would look at both of them. Or worst case scenario, you might have to drop the option.
Okay.
It all depends on what you're seeing and how things are developing, how the markets are, and how raising money is. It's the reality of what we do. That's for sure. We certainly would like to drill that project. So that's our goal right now, and we could do it. Maybe you find partners. Maybe you renegotiate and really like the Finley team, and I think they want to see it move forward too. So yeah, we have to look at all of those options, and everything's easier when you have a lot of money. That's for sure. And markets aren't what they are.
I think that's true for life too, right? Are you actively looking for a partner though? Those deals are popular where you get someone else to spend. I mean, you operate the project, but someone else spends money on it, sort of earns into you. Is that something you're actively looking for?
We're always talking to people. Yes, we are.
Mm.
100%.
Okay.
For
Nothing.
example,
Okay.
I mean, we could option the catch. We could option uh, some of our other projects as well. I mean, absolutely. I mean, we've got a lot of great projects, so we have to look at all of those scenarios. We can maybe work with Finley on the pill. Uh, haven't had to have that conversation yet, but everything's on the table. Anything that we can advance these things, try minimize dilution for the company. We have to look at all the options. And one thing that we've thought about doing is a strategic alliance on kind of looking at the Yukon Stikine terrain, where you have, because nobody's ever looked, like you look at that whole Stikine from Carmex down to Whitehorse in the Yukon. There's hardly any relative. Like the Golden Triangle in BC, everything's staked. In Yukon, you still actually have to physically go out there, go on the ground, stake a claim. There's very few claims staked in Yukon Stikine terrain, so maybe we could do a strategic alliance where a company XYZ, gets us to do all of the early stage work. I'm sure you're probably familiar with strategic alliance. You do all of the work, then you get a designated project, and then they can earn into a designated project. And basically, it's a non-dilutive way to bring projects and new discoveries to the table.
Hmm.
Yeah.
But you're not necessarily more advanced on any one of those scenarios. Like it's not one that you're specifically moving forward with more right now.
I can't really speak to that.
Okay, sure. Because I was gonna ask you if that XYZ company could be an HECLA company. Um, but I suppose that's not something you can talk about either.
No.
Okay. What is your relationship with Barrick and Hecla? I mean, they're legacy shareholders. Do you guys talk? Do they just have that position sort of forgotten? Do they want to keep topping up their ownership? How does that work? How does the dynamic work?
So for Hecla, I mean, I think it's a great relationship. We were able to do the spin out and keep the team together, and we really want to work with uh, Hecla and kind of transitioning. They bought a very big project off us, the Raqqa Gold project. We want to help them out, on board onto the Raqqa Gold project. I think our team's going to go out with them this summer and kind of show them the project for a day, or two maybe. So, and then we have two nominees on our board from Hecla, and again, Kurt Allen is their VPX, and he's on our technical team as well. And so, yeah, it's a great relationship.
Hmm. Okay.
Yeah.
How's First Nations and everybody up there happy with you potentially drilling this year?
Yeah, well, we've been drilling there for 2 years, and we've had numerous meetings with Royal Salmon Carmack First Nation for the cats anyway, and also for the four First Nations for the pill as well.
Yeah, but I was
And
asking about BC specifically, yeah.
OBC, oh sorry, yes. Yeah, no, I think the Tutagon is you know because there's been so much work in that Tutagon, it's kind of an area where working is definitely um, the First Nations there are fine with working there as well. So,
Right.
and a lot of the development corps are working up there as well in the Tutagon.
Okay. So no, I mean, it doesn't sound like it's going to be an issue if you can find more money. If you can raise the stock price, find more money, you're going to be able to drill it. They're not going to stop you. That's what you're telling
No,
me.
no,
Okay.
no. I feel very. We were up at the. It's a really really great place.
Okay. You also have two more properties in the Yukon. I didn't look into them almost at all because I noticed they're early stage. I mean, what's the deal there? Options, money that has to be spent on it. How's that? What's the state?
Yeah, so we have the Sands of Time, um, and that's an early stage one. There, we have to do a little bit of work there. But what for all of those earlier stage ones, we do is we apply for what's called a YMAP, Yukon Mineral Exploration Program, where they can, let's say, for example, we're going to do $100,000. Well, this is what we're doing at Sands of Time, for example. We think we're applying for $100,000 program. We do the $100,000 program, and the Yukon will give us back 50% of that.
Hmm.
So on these earlier stage things, almost every year leverage that program to get work done and advance these projects. And for example, the Milner and the Max Copper, two really nice early stage exciting projects. We'll be doing the YMIP as well.
Hmm.
It's a really good program. Yeah.
But it's basically walking the bush, chip samples, that type of thing. Or are you doing
Soil
geophysics, something
sampling.
else?
Yep, geophysics. You can do geophysics, soil sampling, prospecting. Yeah, like
Okay.
for Sands of Time, I think we're going to do a big soil grid. It's right next to Casino. Got a massive Molly um, uh, geochemical anomaly, and I don't think there's any gold was done on those soils, so we need to do gold for that as well.
Hmm.
Yeah.
What else happens in the meantime? I mean, April, May, June, you're going to be, well, hope to start drilling in early May, but in terms of news flow, what happens in those 3 months? What kind of news are you expecting?
No, I think because we're in a financing right now, we can't um, really we don't have any material information to put out. So, I don't think we'll have a lot of news there. We want to just focus on bringing in as much money as possible, and then announce kind of our program, what we plan to do, and any other initiatives that we're working on right now as well.
Right. Okay. Got it. Well, Graham, I'm all out of questions here. What did you come here hoping to talk about, but I'm failing to bring up?
No, I think that's great. I mean, I think I think the key thing is we're a new company that has a rare new copper gold discovery in a friendly jurisdiction. So there aren't very many of them around that are brand new like this. So it's pretty exciting time for Cascadia.
All right, thank you, Graham. I hope you'll keep me updated on this if you find something, or maybe ignore me if you don't. And then in the meantime, I'll travel a bit more to the south here from the Yukon, because although I personally preferred cold over hot, I still got work to do in the U.S., Southeast USA actually, and more specifically both South and North Carolina, where I'm talking to Leighton Croft, who's the CEO of Carolina Rush, a company looking for epithermal and copper gold deposit, porphyry, copper gold deposits. Companies listed on a TSX-V under the ticker symbol RUSH, so that'd be RUSH, where an average of about 160,000 shares trade each day, with a 52-week high of 25.5 cents and a 52-week low of 7.5 cents. With a market cap of just about $7.5 million, excuse me, and 43 million shares outstanding. Today, this is a 17-cent stock. There are 3.5 million options and 14 million warrants, resulting in about 60.5 million fully diluted shares, about 28% of which is in the hands of management, board advisors, and consultants. There is a 17% estimated to be held by institutions, and 19% is estimated to be held by high net worth individuals, leaving about a third, or well, let's call it 36%, in the hands of retail investors. According to the last financial statement, which is dated September 30, the company had about $1.5 million in cash, as well as some tax receivables and some prepaid expenses, with about $500,000 showing up in on the current liability side of the balance sheet, mostly concentrated in account payables and accrued liabilities, most of which is in related party transactions, including management fees and share-based payments. That same financial statement tells me that the company spends on average about 80 grand a month on corporate and administrative expenses, while for the 9-month period in 2023, they spent on average about 35 grand a month on exploration and evaluation. So, yes, actually more on G&A than on drilling, but that's only the first 9-month period. And most of the 2,000-meter drilling that the company did last year was completed in the latter part of 2023, finished in early 2024. So a more fair G&A to drilling ratio should be available once the full year financials are announced, hopefully any day now. And as always, this is a non-revenue generating company, which means they rely on the public market for financing activities, as evidenced by a $3 million brokered private placement announced 2 weeks ago at 20 cents with a 30-cent half warrant. Hopefully, that's also something I can hear more about later on in the conversation, because I don't think that's closed yet. As it is scheduled to be closed, or to have an update on it by April 3. But as always, you will have to act on the side of caution and head over to the company's website as well as setterplus.ca to look at the most up-to-date numbers and its official news and stuff like that by the time you're watching or listening to this, because I mean, these numbers will have changed and these companies raise money and spend money, so that's kind of the whole thing. That aside, as I mentioned, a couple of projects. There's there's 3 in total. So there's 1 in South Carolina and 2 in North Carolina. But the focus is on the South Carolina part of the story for now. That's where the flagship Brewer copper gold target is. It's so it's not huge. It's about 400 hectares, the historic mine here. But that's where the historically producing Brewer gold mine is, and it's also located 17 kilometers away from Haley, which is a currently producing gold mine. Brewer was a mine that operated from the late 80s to the mid 90s as an open pit complex. So it was a few open pits actually that produced here. And they produced just about 180,000 ounces of gold. And they didn't go very deep in that. Those are about 65-meter deep pits. So relatively shallow as open pit mines go. And this is an epithermal high sulfidation gold copper system. So the gold that came out of here, this is also the US, so it was in sulfites instead of in oxides. So despite some of these being some of the veins and some of the structures here being exposed, the heap leach operations couldn't take the gold out as well as expected, as far as I understand. Again, something that maybe we can touch upon later on in the conversation. So why deal with this thing in the first place? Well, Carolina Rush says that because mineralization here is driven by subvolcanic intrusion, there could, of course, emphasis on the could. This is exploration, but there could be a copper gold porphyry system at depth driving the mineralization here at surface that makes it worth the chase, basically. That's also what the recent drill program aimed to define after hitting a new breccia zone about 150 meters south from the historic mine in 2021 initially. And the company assumed that, again, something was driving that mineralization. So they followed it up, announcing a hole that attracted a lot of attention from the market with the headline grades of 62.5 meters at 8.5 grams per ton gold and 0.3% copper, something I hope to learn more about further on in the conversation. Drilling here was eventually extended to 600 meters, again in an effort, excuse me, to find the source of mineralization, but that hasn't yet been successful. Although um, well, they get to say that the rocks they did come up with, as well as the alteration system, is a good sign that that might point them in the right direction eventually. As I said, there's another project, but I'm not doing a full overview. There's two other projects actually, but I'm not doing a full overview of the projects here because I don't want everyone to fall asleep. And also, again, South Carolina is where the focus is nonetheless. So let's maybe pick it up from there, Leighton, and talk about what I just mentioned, because the good hole that I mentioned was a good hole. Maybe not too much to talk about here at the beginning, maybe later on. But not all holes you've drilled so far have hit the same grades, right? For example, in the past, you've also drilled, as I said, a few to 600 meters deep. Didn't find the porphyry or the source of these high sulfidation breccias, and nothing of the same grade or width than what you found with that hole 21, including the three holes that came back after it. And while you're finding some mineralization below the Brewer pit too, it's not the source of those breccias. So maybe talk to me about that off the bat. How come? What are the geos telling you? Why didn't you hit it, and where do they think it might be?
Sure. Thanks, Antonio. So I think it's important to understand, and you set it up very nicely. The Brewer system is big. You know, this is a 2 kilometer diameter breccia diatreme. And what our most recent drilling, in particular, hole 15 from late 2021 and then holes 21 and 22, have identified a new breccia area. We're calling it the Tanyard breccia. And it's separate from the previously mined oxide mine called Brewer. So we have the Brewer breccia and the Tanyard breccia. But a 2 kilometer diatreme breccia is a lot to explore. We've only drilled 25 holes to date. We have reported on all of those results as of today. And, you know, the results we've gotten back, particularly, as you point out, below the former Brewer pit, so that Brewer breccia, and then most recently, and this is frankly what we're most excited about for our new drilling that we've planned, is in the Tanyard breccia. It's about 100 to 150 meters south of the Brewer. So, you know, that was never known before, because the Tanyard zone was where the waste dump was for the previous oxide mine heap leach operation. And they cited that waste dump on condemnation drilling with holes that were 30, maximum 40 meters deep. So we tested based on some surface rotary air blast results that looked encouraging in late 2021 with hole 15 as a big step out hole. And frankly, we had no idea what we'd hit. And hole 15 hit 62.4 meters of a gram gold and 0.15% copper. And it really got our attention. Unfortunately, it took us a while to raise enough money to get back to drilling. So as you said in your opening, we started drilling again in October of last year. So, and we drilled through January of this year, we drilled 2,000 meters in 8 holes. And while our first 3 holes of that most recent program were designed to test the geometry, the sort of the 3-dimensionality of the mineralization we had encountered earlier below the Brewer pit, so this Brewer breccia in those vertical holes, the 4th hole of that 8-hole program was hole 21. And this is the hole that, as you said, returns 62.5 meters of 8.5 grams gold and almost 0.3% copper. And that hole was specifically testing hole 15. It was collared to the north of hole 15 and drilled at an angle to the south. And so what that told us is that the mineralization that we encountered at hole 15 seems to be dipping to the north. So then with hole 22, we stepped out from hole 21 to the east 50 meters and drilled a similarly angled hole, and hole 22 returned 56 meters of 0.7 grams gold and 0.11% copper. also indicating that that mineralization that we intercepted in hole 15 is dipping to the north. So what we've understood is that there is, this is open in all directions, and then there's almost a kilometer of strike length east to west. If I may add, in addition, in 2022, we did a 61.5 line kilometer dipole induced polarization, or IP, geophysical survey across the entire alteration zone. And it looked down about 250 meters. And what we're seeing with the drill results from now holes 15, 21, and 22 is that there seems to be a correlation with the chargeability anomaly identified by that geophysical survey. So what our plan is going forward, once we close the current financing, we have a drill rig on site. It can be mobilized quickly. And we've already plotted 10 to 12 holes to test this Tanyard discovery zone along strike. And that's our immediate next step. The sort of the parallel action we're going to do in addition to that is we're going to be consulting with our geophysicist to conduct a deeper sensing geophysical survey. As you said in your description, this is, we believe, a porphyry target. This is a high sulfidation epithermal porphyry system. We have lots of reasons to think that there is a porphyry, whether it's mineralized or not, we don't know. Whether it's high grade or not, we don't know. Whether it's large or not, we don't know. But we really do think that the model is strong. And so we believe that a deep sensing geophysical survey allowing us to look down a kilometer instead of just 250 meters could really aid in targeting that porphyry target. Meantime, all of our drilling, except for hole 4, which you talked about being 600 meters, have been relatively, near surface, if you will, 200-300 meters. And hole 4, by the way, did end in highly altered rock. It wasn't mineralized, but the reason we kept drilling, because remember, hole 4 intercepted 115 meters of 0.9 grams gold and 0.17% copper. So it was a good result, but we kept drilling because the rock kept looking, like we're in the system. And when it ended, we're still in the system. So that's testament to the fact that this is a big system. We're starting to get our head around some of the structural controls, but I feel like we've just scratched the surface with just 25 holes. So with this new financing, assuming it closes as planned and is fully subscribed as it is, I think that's going to allow us to really get back and start testing the multiple targets that we have.
Right, loads to touch upon there. I appreciate the overview, and I think main takeaways again. You think this is a big system, early stage, and what you've drilled so far is you have some grade, but it's more important because it tells you, it sort of helps the aim because you're getting a better understanding of the entire model. That's sort of the takeaways that I wrote down here, and that's where we can actually also take the discussion from because. I'm trying to get a better understanding of the model here too, and specifically a better insight into the alteration system. You said that one hole ended in the targeted alteration, I suppose. After the drilling of last year, well, actually that concluded early this year. What's that telling you about the alteration system? What insights are you getting into that?
Well, what I would speak to, and I would ask your viewers and yourself, on slide 14 of our corporate presentation, we have a 3D model, and it shows, we've broken it out by different alteration, and it forms a very clear sort of circular target with a bullseye. And the bullseye happens to be this topographic high. When you're in Chesterfield County, South Carolina, right outside of the town of Jefferson, standing on the top of Brewer, you can see Hale on a clear day. Hale is 17 kilometers away. We are the highest topographic feature in the area. It's a relatively flat part, the northern part of South Carolina. That is full of quartz porphyllite acid leach metavolcanics. So the Brewer mine, the historic mine, remember people, just like at Hale, found gold here in the early 1800s. The town of Jefferson next to Brewer was established in 1904 because of Brewer. So Hale and Brewer and other thousands of examples around the Carolina terrain in the southeastern US. It was the first gold rush in North America in the late 1700s, 50 years before gold was discovered in California. So all of the gold, it started at Brewer, alluvial gold in the nearby creek, and they worked their way up the hill. And that became, in the 1980s and 90s, as you said, a shallow, 65-meter deep oxide gold mine. And that is on the top of this hill. But then surrounding that is quartz, sericite, pyrite, altered metavolcanics. And, it goes on. But the model holds when you look at a classic, Richard Sillitoe, on this same slide, we use cartoons from Richard Sillitoe, who's known as one of the world's foremost porphyry experts. And you can see in most cases, there is a lithocap, and sometimes that can be, a kilometer deep. And you'll still have, altered rocks there, but sometimes it takes that much down to a kilometer to get into that quartz porphyllite acid leach metavolcanic zone. And that for us is at surface, right? And we have some core that proves as much, and our geochemical analyses prove as much. So what that leads us to think, and we've had other independent folks come to site experts who tend to draw the same conclusions, is that in the case of Brewer, there's been so much erosion, and yet that topographic high, what's remaining of that lithocap has been sort of like an armor. It's full of white mica, it's full of silica, happens a lot of topaz as well. But what it means is we believe that the erosion has meant that we are actually lower in the system, which in the case of exploring for porphyries can be a very good thing, because instead of the porphyry being a kilometer or more at depth, it could be, less than that. And again, we can't prove that yet. It's just the model. But we believe that it's a compelling model.
How deep would be a simple question, but hard to answer, I suppose. Because you say you're deeper into this, and where I'm coming from with this is because, again, I want to start thinking about where the source here might be, right? And in one of these news releases, you mentioned that, again, the Brewer and the Tanier breccias are part of a larger, what you call a diatreme breccia complex. Sounds more complicated than it is, but this might, this is actually where you can expand on what you just told me, basically the structural and the lithological characteristics that define this entire complex as a whole. Expand on them and tell me how you use them for exploration targeting, basically, to eventually answer that question. How deep is this thing?
Right. Thank you. That's good. So our first two phases of drilling in 2020 and 2021, we did a lot of vertical holes through the backfill of the old Brewer pit and then below, and a little bit to the north of the former Brewer pit, and a little bit to the southeast. Then we did a few step-out holes, including a couple of step-out holes to the northwest. What the mineralization, the drill results from, and the mineralogy and the geochemistry from the holes that went, below the pit vertically suggest to us that the Brewer breccia system, meaning the mineralization below the former pit, is dipping to the west and plunging to the northwest. Now, holes 18, 19, and 20 of our most recent drill program, the 8 holes for 2,000 meters started last fall, those holes were all collared to the west of the former pit. Hole 18 was designed to target mineralization coming from the west to the east at an angle under hole 8. And hole 19, we stepped out north to test hole 5 back in the pit. Same thing, collared to the west, angled to the east. And then hole 20 was sort of straddling those two right in the middle. And it was testing no hole from the previous drill program because there was a big gap there between holes 5 and holes 4. So that those results, 18, 19, 20, further corroborate the idea that the Brewer breccia mineralization is dipping to the west and plunging to the northwest. Now, for a second, if we go to the northwest, and we think about the potential for the porphyry to be in the northwest, which is a possibility, we have 2 holes from the first 2 phases of drilling back in 2021, holes 16 and holes 17. Now, neither of those were, returned sort of compelling mineralization, but both of those had interesting features. So in particular, if you think about hole 16, and it's located, hold on, I'm just getting my map so I can speak to it. Hole 16 is located northwest of the former pit, probably 150 meters. Hole 16, and we reported on this at the time, it encountered, I think, 2 cases of bornite. So bornite is a copper mineral, but bornite is associated with very, very high temperatures. And so it's often understood that bornite is more likely to be proximal to a heat source. And so that is sort of one clue. Now, hole 7, which is further north, it's sort of northwest of hole 16, and it's probably 300 meters northwest of the former pit. Again, not any super exciting gold and copper mineralization, but the hole was highly altered, and it contained some of that same alteration that we're seeing in the Brewer breccia, right? That quartz pyrophyllite. And so that sort of is how we are thinking about the plunging to the northwest.
Okay. How do you follow that up from a
Geophysics.
okay,
Geophysics.
right?
I mean, the cheapest way to do is geophysics. If we had a huge budget, like a major company would, we'd go up there and drill a bunch of kilometer deep holes. And, with hole 7, we very intentionally did not abandon the hole and we capped it, but we left it open. I think it was a little more than 400 meters. And so it's a cost-effective way of drilling deep, right? We can extend hole 7, which we may do. And we may do it in the near future. And that allows us to, if we want to drill 800 meters in total, we actually only have to sort of actually drill 400 meters. So that's a tactic that a junior might want to deploy to save cash. But geophysics is what we're really counting on and hoping for to allow us to really vector where that porphyry is.
So, but it's geophysics, is that in combination with geochem, or are you doing something else as well this year to better zone in on it?
Well, we always do geochem. We do multi-element geochemistry with all of our assays. So all 25 holes, we have, full geochem, and we've modeled that. And so in the northwest zone, in what we call the deep porphyry zone, we only have those 2 holes I mentioned, 16 and hole 7, in terms of geochemistry. We are considering downhole geophysics as well, because that's another quick and cost-effective way to better understand what's down there. But I think a more comprehensive, deep sensing, 3-dimensional geophysical survey, and this could cost $500,000 to do. So it's not cheap, but it's comparatively cheaper than just, drilling sort of blind or half blind on these deep targets. It's risky for a small company to be exploring a big target. And we're very mindful of that. So we want to be as systematic as we can about it. And any drill holes that we're going to drill in the near term are going to be focused on that southern tenured breccia zone. And in terms of tackling the porphyry, we want to start with geophysics and then use that to target deeper drill holes.
How are the rock? How hard are the rocks? That sounds like a very silly question, but where I'm coming from with this, because I know some jurisdictions in the U.S. can be difficult. So how do the rocks behave there?
Well, it's an interesting question. We've used a few different drilling companies, and sort of without fail, most of the drillers say that this is one of the more challenging places they've drilled. I mentioned earlier in this conversation that we do have a lot of topaz. A lot of that is actually concentrated in the northwest zone. In the 1950s, I believe the US government, at the time called the Department of Mines, was actually mining topaz here as a part of the Manhattan Project. So topaz, as you may know, is 9 on the hardness scale. Diamond is 10.
Hmm.
So even for a diamond drill bit, drilling through topaz is difficult. And as you've heard us talk about breccia, there's a lot of breccia here. So, Brewer can be a challenge at times to drill, but what we've noticed is that particularly when we've intercepted Brewer breccia and now more recently tenured breccia, if you will, while sometimes drilling through that breccia, particularly if there is topaz present, it can be challenging. It usually has turned out to be a good thing because there is mineralization there.
Hmm. How much are you paying per meter to drill that? Are they charging you more, or how does that work?
Well, it really works on all in. Our cost for drilling is about 250 US dollars per meter. That's including a little contingency, and that includes assays as well.
Okay.
But if I can promote something, I would promote FTE Drilling. That's our drilling contractor out of Quebec, and we are so delighted with them. They're world-class drillers. So it helps when you have really competent and experienced drillers to keep costs down, right?
Hmm. I'm thinking that's why it looks like I'm gonna fall over, but because 200, I would have expected it to be more. I mean, it sounds cheap. Why is it that cheap? That's 250 US then, I assume.
Yeah, US. Because
Okay, sure.
everything we do in South Carolina is obviously in US dollars. So I always make that differentiation because we raise money in Canadian dollars.
Right. Yeah, yeah. Yeah. Oh, okay. 250 US makes more sense. What about the deeper targets? I mean, what if you want to take this beyond 600 meters? That's still the same price, or how does that evolve?
Well, it inevitably gets more expensive when you drill deeper, and it takes longer. Um, we, it's hard for me to tell you what that average cost per meter if we drill kind of a 600 meter or more hole. But so far, our last program, we really didn't drill that many deep holes. Um, so I don't know exactly how to answer that. I don't think it would be, exponentially more expensive. I think it would be incrementally more expensive, and that's pretty standard.
But you're not planning any deeper holes this year than 600 meters.
Well, what we're planning, and I think we put this in our most recent news release, is for now, right? Because exploration is iterative, right? You need to do something, you get your data, you add it to your model, and then you have a better model, and then you do your next thing. So I'd like to say right now, we have 10,000 meters of drill targets right now as we speak. But what our near-term plan is to drill 3,000 meters in that tenured breccia zone and do this, or at least begin the process for launching a new geophysical survey, as we've discussed.
Okay.
And I would tell you that 3,000 meters doesn't include, a deep hole chasing that porphyry for the reasons we've just discussed, that we would rather have the benefit of the geophysical survey on top of our existing model to
Hmm.
inform any deep drilling at this stage. And we're so excited about the Tanyard that, it's not the porphyry target, but it's a very exciting, this is 1 kilometer strike length in this huge chargeability anomaly, which there's a great slide on our presentation that shows that. And it's open in all directions. So we just need to drill this thing out. That by this thing, I mean the Tanyard breccia zone.
Hmm. What if it looks like I'm confused because I was trying to convert United States dollar to Canadian dollars and just kind of work around the money that you're spending there. You're doing 3,000 meters, you say $250 a meter. That's $750,000 if Google's calculator works well. That's a million Canadian.
Okay.
Let's say a million GNA, that's 2 million. If you close this raise fully subscribed, you have a million left. Where does that go?
Well, like I said, we might spend up to $500,000, and by $500,000, I'm speaking again in US.
Hmm.
on a geophysical survey,
Right.
right? It's undetermined as of now, but it, it the good ones that look that deep are not, they're not cheap.
Hmm. Okay. Um, yeah, fair enough. But so that, I mean, that 3 million bucks, how's that looking actually? Because you're raising it at, if I'm not mistaken, I can pull it up the chart over here, but I think you're below that raise. Is that, yeah, you're at 19 cents fluctuating, but that's a 20 cent raise. Is that going to close at the 3 million bucks?
Well, what I can tell you is that it's fully subscribed, and as of right now, we plan to close as scheduled. We announced that it closes on April the 3rd.
Okay. Yeah, fair point. And that's soon actually. That's next week. Um, and so I sort of threw it up there, G&A. I said 1 million bucks, judging off what you spent last year. Does that sound reasonable? Is that what you're budgeting for corporate expenses?
Yes.
Okay. And so, but the 3,000 meters, you're thinking that's going to be enough to sort of give a couple of answers to the market as to what we've been discussing here. And then hopefully that helps you get a higher price and then raise on the back of that, or how do you see that?
I That sounds good to me, Antonio.
I wish we could look into the future and see if that's exactly how it's gonna go down. You're you were maybe you can talk to me about the how you're gonna structure that G&A too, because what I notice is that you're awarded a relatively large, well, at least in my situation, relatively large bonus in 2021. It was like $570,000. But then no bonus in 2022, and the information circular for 2023 is not here yet. But what's the company's approach to bonuses for 2024 and going forward here?
Well, I started this role in April of 2017, and my compensation um, was very modest. I would argue it still is. And the bonus in 2021 that you referred to was really a function of a cumulative 4 years of performance, and most particularly 2019 when we won the Brewer. It was a pretty competitive process, and we were quite proud to win. And then, we've raised more than $9 million since then for Brewer over multiple financings. And I think we've taken a very prudent and systematic approach to exploration at Brewer. Again, it's a huge target. It's very complex geology. And we've never wanted to sort of do it in a reckless way. And so that's why, I think it's taken a while to get where we are. But that bonus was a function of getting to where we were. And by that point, we had released the drill results for holes, 4 and 5. That's 181 meters of 1.2 grams gold at 0.27% copper was hole 5. Hole 4 was 115 meters of almost a gram and almost 0.2% copper. And our share price at the time, this is pre-consolidation, right? It went from 7 cents to 19 cents. I think the board was happy and decided me to reward me.
Hmm.
And it was much appreciated. I will tell you that I have not taken any compensation for 23 months now. I've been accruing.
Okay.
And a lot of members of our team have been doing the same. So we take cash very seriously, and we put the priority on exploration.
Right. Well, I appreciate the overview there, and you mentioning that you joined in 2017. The company itself has existed for a while now, was a company before. How is the composition of the board, and like are you the newest member? And yeah, again, because the company has sort of switched focuses multiple times based on the setter filings.
Well, that's right. I think the company was actually founded more than 15 years ago by two gentlemen named David Mosier and Don Whalen. They had previously run a company called High River Gold, which had mines in Canada, West Africa, and Russia. And I I lived and worked in Asia, Antonio, for more than 20 years. And 15 of those I lived in Mongolia and worked there. And it was through that I got to know Airdine Resource Development. And in 2015, I was asked to join the board of Airdine Resource Development, which is a TSX listed company focused on Mongolia. And I've been a director ever since. I've actually been the chair of the board since 2019. And I mention all that because Erdene is headquartered in Halifax, Nova Scotia. And in 2016, I was there for an annual general meeting and board meeting. And I got to know the other directors, one of whom is David Mosier, the co-founder of Pan-Continental. It was originally called Pan-Continental Uranium Corporation, and the ticker symbol was PUC. And they were exploring for uranium in Australia. David Mosier is a very seasoned and acclaimed geologist and executive. He started his career in the 1970s exploring in Australia. In fact, he discovered what I think, if I'm not mistaken, is the largest undeveloped uranium deposit in the world called Jabiluka.
Mhm.
In any event, when I met Dave in 2016 through the Erdene board, I had just relocated my family back to the Southeast US. I was born and raised in the Southeast US, despite having lived abroad for a long time, and wanted to be near family, so moved back to Charlotte. And I had just moved. And Dave and I got to talking, and he said, well, I've got this company that I'm a part of, a small company. And, we've sort of been looking for a project and we just found one, and it's a gold exploration project in South Carolina. And at the time, the company was called Pan-Continental Resources, or Pan-Continental Gold, sorry. And that's how I got involved, and just talking to Dave. And because Charlotte, where I live, is an hour to Jefferson, it's an hour drive to Brewer. So it's very close. And I started as an advisor, as a volunteer advisor. I didn't get paid. And then, like I said, they appointed me CEO in April of 2017. We had very little cash on hand. We had a private land lease just next to Brewer. So imagine this, the company had picked up this package of land that wasn't Brewer, but it was next to Brewer, because that land is very prospective as well. And I can speak for myself and say that starting then, when I got involved in this company, the more I read and the more I learned and the more people I talked to, it was like, Brewer's the target. Brewer is what we want. I mean, it's great to have the land around Brewer, but that's how kind of this journey started, in a way, at least for me, with a vision. And we established relationships with the state and the federal government, who's kind of been controlling Brewer since 1999. And that's what kind of led bit by bit. For a while in 2018 and 19, we picked up some nickel, cobalt, copper exploration assets in Northern Ontario. And we changed the name of the company from Pan-Continental Gold to Pan-Continental Resources. In 2019, when we learned that finally the state of South Carolina had appointed a receiver, they've been talking about it for like 2 years, since 2017. They launched that in 2019. For a year, they sort of had this competitive process to get Brewer. And when we won, we divested of those exploration assets in Ontario, and we focused solely on Brewer. And then about a year ago now, in early 2023, we rolled back the share structure. We consolidated on a 10-to-1 basis, and then we changed the name of the company to Carolina Rush. And shortly after doing that, we announced, or right before doing that, rather, we announced acquiring options to the Sawyer and the new Sawyer project, which you mentioned in your opening. These are low sulfidation, epithermal, sort of hail style, if you will, gold deposits. All three of our projects are former gold mines, right? We like to explore for gold and copper where there was a mine before, but those are in North Carolina.
Right.
So I'm kind of jumping around, but I'm trying to answer your question in a fulsome way. So Dave Mosier was chairman of the board. He stepped off last year. He's a strategic advisor. Lori Curtis, who has been an advisor to the company for a long time, is an advisor. David Petroff is an independent director. He's been on the board for quite a while now. I've been on the board since 2017 as well. Our newest director, who's a mining engineer, is Gordon Babcock, and he joined the board last year. And we also have a few other technical and strategic advisors: Keith Laskowski, Philip Poirier, Kenneth Brown. So I think we have a good team.
Keith Laskowski, is he not with Sandstorm?
Keith Laskowski is vice president at Sandstorm Gold Royalties, but Keith consults for other companies as well. I think he's pretty selective. I know he's very busy, but Keith, and I feel comfortable quoting Keith because he says this all the time. He says, the only reason he's advising Carolina Rush is because of the rocks. And,
Right.
Keith is a very experienced geologist. I actually crossed paths with him in Mongolia because he worked there for a while. He's worked all over the world. And, he has evaluated projects and targets and deposits all over the world. And he is really excited. The one other thing I can say to you about Keith is that he started his career as a geologist for Newmont Mining in the 1980s.
Mm.
And at that time, gold prices were rising. And he was based in North Carolina, in fact. And he was in charge of the southeastern US, and he visited Brewer in the 80s and a lot of other, targets in the region. So we're very fortunate to have Keith as a senior technical advisor, given that history. But he's a very experienced, high-level geologist in high demand who's very busy.
Yeah.
And he only works with us because of the rocks. And I think that that's worth repeating.
Well, I had dinner with him in Toronto. He actually sat right next to me, so I got to hear a couple of stories. But that's exactly when you mentioned that's exactly what popped to mind. It's like he's very busy. How much of his time do you think you're getting versus what you're paying him was the first thought that I had.
Well, we pay him by the hour. We
Okay,
pay him for what he works. And we're very practical with how we pay everyone.
good. Oh, good. I
But
like hearing that. And wh
yeah,
where all this comes from is really understanding how you spend money, where does it go, and also just like the structure of the company. Is it gonna stay focused on this one thing, or is it gonna become a lithium company,
oh,
next
right.
year if lithium goes up?
Well, I will tell you, you may be familiar with the Carolina Lithium Belt. There's companies like Piedmont Lithium and Albemarle Corporation
Mhm.
right near Charlotte,
Yep.
but that's not our focus. I could say
Okay.
that for sure. However, we have an excellent database of the southeastern US. We have identified more than 10 million ounces of gold that's been mined in the southeastern US. We've identified nearly 1,500 gold mines and prospects. Like I said, this was the first gold rush. And when gold was discovered in California in mid 1800s, some people left. But the real reason that the gold and copper mining industry in the Southeast stopped was the US Civil War in the 1860s. And that's often overlooked, but it was incredibly disruptive and it never came back. So this is a very underexplored area. Um, and we are, that's why we changed the name to Carolina Rush,
Mm.
because we are the first mover and we want to be the first mover in this region. Now, as a small company, we also don't want to kind of distract ourselves. So we're always very clear in saying right now, as of right now, Brewer, as big as it is, with as much potential as it has for both gold and copper, both kind of closer to surface and then at depth, perhaps at this porphyry target, is our flagship, is our focus. We have great option agreements for both the Sawyer and the new Sawyer for 10 years, low cost, and we have good relationships with the owners of those. One of the owners of the owner of Sawyer is one of our advisors, Philip Corrier, and a large shareholder. So we're not distracted, but we're excited. And we have 7 other targets in the Southeast kind of on a list.
Mm.
And one thing that we talk about when we talk about Brewer, I mean, internally talk about, is we say this is a big company target. And it is. And so you're probably familiar, Antonio, with examples of smaller companies that had big targets and then, frankly, it just didn't work out. And it can be pretty risky, especially when you start drilling deep holes. So one thing that's true is that I want to say starting 2 years ago, when we had only announced probably the results for 10 or 15 of our holes at Brewer, we started getting approached by bigger companies because they were looking at the results, they were watching us, and they were not just looking at the drill results, they were really looking again at that alteration model and at that porphyry model that was starting to take shape in 2021. And so that I will tell you that in recent weeks and months, um, we've had a real uptick in interest from companies, unsolicited interest from large companies, the names of which you would know. And to me, that is important because it says it's in a way it validates that we're onto something big because big companies only go for big targets. But it also speaks to a potential sort of strategic outlook for our company. You know, my priority, first and foremost, is shareholder value and creating shareholder value. But there may be a time when the best way to create shareholder value for Carolina Rush is to bring on a strategic partner who has the kind of deeper pockets and the expertise to properly drill out Brewer. And by properly drill out Brewer, I mean, we've drilled 25 holes. I think this thing needs 25,000 holes. And, you know, so to speak, and I'm being a bit tongue in cheek, but we're just scratching the surface. We need an order of magnitude increase in exploration at Brewer. Fortunately, we have 6.5+ years with no option payments to explore Brewer before choosing to purchase it or not. But it really does kind of feel like a big company target. So having this unsolicited interest from big companies is encouraging with only 25 holes out. And there may come a point in time strategically where doing a deal with someone is the best thing for shareholders. If that happens, we've got these other projects that are excellent. I mean, last week we put out results on our trenching at Sawyer. I'm just looking at it now. You know, we had 2 trenches, and in one of them, this is at surface, right? Trench 1 returned 36 meters of almost 2 grams gold, including 23 meters of almost 3 grams gold. The second trench returned 34 meters of 1.1 grams gold, including 6 meters of 1.8. So that's our project in North Carolina. Just down the road from that is another project called New Sawyer, and trenching results done by the previous operator were, you know, of similar grade. So it's important to always sort of scan the horizon and have a vision and have a strategic plan, even though we're, as I said, we're focused on the right now and it's iterative and we like to take bite-sized chunks out of what we're doing, given how small we are. But there is a vision to all of this.
Would you want an operational partner or just a financial partner? And what I mean by that is, like, would you want a BARIC to come in and just pick the drill targets and drill it themselves? Or would you want someone like Sandstorm, which, I mean, closer connection here, to come in and give you a bunch of money and earn in, you know, a potential royalty or even a partial asset level ownership?
I think it's a very good question. It's difficult to answer because it's hypothetical.
Hmm.
It obviously will depend on the deal. Look, Patrick Quigley is a world-class geologist. Keith Laskowski is a world-class geologist. Laurie Curtis is a world-class geologist, and they're all in our team. I'm very confident of our ability to target and drill Brewer with success. It does require capital. So if there's a scenario where, you know, the deal would just sort of be capital, I think we're all very comfortable with that. If there's a deal where it's capital, but it's attached to, you know, a larger operator, as you suggested, hypothetically, it depends on the deal. We've had multiple conversations with multiple companies and, you know, folks are in our data room. But right now, we're not distracted by that either. We have a smart enough team with a good enough model that we don't need anyone, I don't think, at this stage telling us where to drill. So let's see where it goes. I think right now, the name of the game is shareholder value. That's what we're focused on right now.
Well, that's always the name of the game, right? But the question is, how do you actually get it? What does that mean?
Well, it does, but I guess I'll answer that. What it means is drill, baby, drill. That's what we want to do. And if a deal comes along that's too good to pass up, then we can spend more time and effort on that. But right now, the time and effort is going to be on drilling out the tenured breccia zone and doing this deep looking geophysics, because I think that's going to create the most shareholder value in the fastest amount of time.
And we've really focused this entire conversation on Brewer. So I don't assume you're doing anything on Sawyer and New Sawyer before a potential deal or anything else, but I don't assume anything is happening this year. Is that the case?
Well, we may do some very, very low cost work at Sawyer and New Sawyer this year. It will not distract our work at Brewer by any means. But we do feel like it makes sense to continue exploring those 2 projects because they're great projects. And we don't want them to stagnate. And we do have we do have plans to continue exploration. I'm not talking about drilling. Drilling is going to be at Brewer. So nothing major is going to happen at the other projects, but nor do we want to kind of let them stagnate. And so
Right. When's the drill program starting, by the way, at Brewer?
well, as I've said, we have FTE drilling. They were great when we finished the 8 holes of the last program. They left their drill rig at site, and that saves us mob and demob costs, by the way. And they've told us, let us know. We've told that they've read our news release. They know that we plan to close our financing on April 3rd. And they're getting ready to come back. So I'd like to think we'll be drilling in April at Brewer.
Okay. And then 6 to 8 weeks, I assume, turnaround. How many meters are you getting a shift? 50, 70? Well, it's hard to rock, so probably fewer meters.
Sorry, hold on. When you say 6 to 8 weeks turnaround, are you talking about assays?
Assays, yeah.
Well, actually, we use ALS and we send it out to Idaho Falls and Idaho.
Okay.
And this past program, it was more like 4 to 6.
Nice. So, but yeah, how many meters are you getting per shift?
Yeah, it kind of depends on the breccia and the topaz I was mentioning earlier, but
Hmm.
FT is good. I think some days they were getting up to 50.
Okay.
Uh, More like 40, 35 is probably the average, but we're quite happy with their performance.
Right. But announcing holes, are you gonna batch them, or depending on the results, do a hole by hole approach?
Well, again, what I'd like to do, give me a second to do this myself so I can speak to it. But we already have, at least on our corporate presentation, what we did was we sort of put on slide 22, these are notional, but it's basically a grid of holes along strike to the east and the west, next to holes 21, 22, and 15.
Hmm.
And you can see what we've done on this slide is actually overlay it with the geophysical, the IP survey, and that big, huge chargeability anomaly south of kind of right on top of the Tanyard breccia target zone. And you can see these are 50-meter spaced holes, testing that north dipping mineralization that we're seeing in holes 15, 21, and 22. So, we're already kind of showing you where we're going to drill.
Hmm. Okay. But so in terms of releasing those assays, I'm basically trying to
Oh,
gauge your news flow here.
I see. Okay. So, what we'll probably do is drill the first 5 holes as fast as we can, because what we're seeing with holes 15, 21, and 22 is there's a lot to learn from the core, right? And we can kind of see, in the case of hole 21, I don't know if you remember, but there was kind of a bonanza grade part of it, and that was associated with a quartz telluride vein. Well, when that came out of the ground, I was there, and Patrick said, wow, we've never really seen this before ever at Brewer. And this may run gold. And sure enough, it did. Also, that hole had, in certain cases, near full replacement sulfides, so massive sulfides. So we want to get the first few holes done quickly, look at them, kind of see where we are in the system, particularly vis-a-vis holes 21, 22, and 15. And we're going to want to get results back as fast as possible. So I'd like to think that we're going to see results coming in the summer.
Hmm.
And that should just continue, just like it did sort of over the past 2 months.
Right. And then again, probably depending on mineralized versus not mineralized, you're gonna do a batch approach versus a hole by hole approach.
Let's see. A lot of that, frankly, depends on logistics. So we have
Okay.
a really small team. Like sometimes I cut core. Jen Spohn, our manager for data and administration, who's trained as a geologist, she will help log the core and she will help with the sampling. We have a local contractor who helps us with cutting core. And then Patrick Quigley and his brother Eric Quigley, who's also a geologist, um, take turns and as the main geologist on site. So we're a very lean team. But my point to your question is, excuse me, whether we send these off to the lab hole by hole or in batches, is frankly a function of our own kind of workflow, right? Because Patrick or Eric, whoever's there at the time, is also out at the rig every day. Now, our local Jefferson office, where we have our own sort of core shack and where our saws are, and we take photos of all the core and where we log it and everything and sample it up, is only about a 10-minute drive from Brewer. So it's not far. But it's really intense when we're drilling because we are so lean as a staff. And sometimes it makes more sense, frankly, to send it hole by hole. Last time, I think sometimes we sent a half a hole and then we sent the second half of the hole.
Okay. Well, partial holes. Yeah, it's something I don't prefer unless well explained in advance as to why you do it. So stuff like this, I suppose is fine. Are
You
you?
do it because of time and money. And it has no bearing on QA/QC.
Well, some people do it as a promotion tool, right? They sort of
Yeah, that's not what we're doing.
one part of the hole is mineralized, announce that now, and then bury the second part with another news release type of thing. That's stuff that happens. So that's why I'm kind of trying to be wary about. Um, what else are you doing any metallurgical work? Because again, this is a high sulfidation system, could be trickier than oxide systems. You'd ideally want to know more about the metallurgy early on. Is that something for 2024 or?
Well, there's different aspects to your question. So in the backfill material at Brewer, we did some sonic samples back in 2020, 2021. And we know there's a good bit of gold in that backfill material. It's sort of a blend of oxidized and mostly now, sulfide material. And some of that has inargite, which is a copper-bearing mineral that has arsenic, right? But we did do some very basic cyanide bottle roll tests then, and the recoveries were actually pretty good. And I'm talking about the backfill material. Now, in 1984, Hazen was a company that was commissioned by the operator at the time, Westmont, to do a full flotation survey, metallurgical survey. And that report is on our website. It was 1984. And those recoveries were pretty good as well. Again, that's only from material in that former shallow oxide pit. Now, when it comes to some of our more recent drilling, these last 8 holes, we're seeing as much, if not more, chalcocite as we are inargite. And that's relevant to this discussion. Chalcocite is a copper-bearing mineral that does not contain arsenic. Arsenic is sometimes the yellow flag or the red flag when people think about metallurgy. So for instance, we're not seeing much of that in the Tanyard breccia zone, at least as of yet. So we have done some metallurgy. Some metallurgy was done prior, a very credible report, which, like I said, we've published on our website. But right now, I think the best use of our money is drilling. If we get to the point, Antonio, where we decide to produce a 43101 maiden resource, then I think metallurgy makes sense, right? Because you want to start seeing, okay, how is this all gonna get processed, and what are the risks, what are the costs, and all that.
Right. That's when you're also gonna go looking for the nasties, arsenic, so on and so forth.
Well, yeah, for sure. But like I said, when we're seeing less and less inargite, especially in the southern Tangent zone, that bodes well for metallurgy vis-a-vis arsenic.
Fair point. What kind of land is this? You might have mentioned this, but I probably missed it because I wrote it down on the list. Is BLM land, or how does that work?
Right. There is no BLM land in the eastern US, or at least where we are.
Okay.
That's more common in the western US. This is private land. Now, the unique case of Brewer obviously was a mine. It's almost 1,000 acres. And then when the previous operator abandoned the site, there is acid mine drainage on the site. And we believe it was exacerbated by the backfilling of the pit before they abandoned the site. The site has been under government control, and it's effectively been sort of, if you will, in no man's land, pardon the pun. So it's controlled by the government. It's maintained by the government. But in 2019, it was put into receivership, which is then when the process started to have the competition and so on. We signed our option agreement in April of 2020. Our option agreement goes until the end of 2030. And our option agreement is with the Brewer Gold receiver, which is that court appointed, trustee, if you will. So effectively, um, the receiver effectively has title as of right now. The benefit for expiration, first of all, we have great relations with working relationships with the receiver, the state of South Carolina regulators, the Department for Health and Environmental Control, or DHEC. They're effectively the regulator. And if this becomes a mine again, then they, just like with Hale, and Hale, don't forget, is now underground. So DHEC has permitted both an open pit mine and an underground mine. They will be the regulator if there's a new mine at Brewer. And then, of course, there's the Federal Environmental Protection Agency, the EPA, who's a stakeholder in all of this. But now, when we need to drill, well, when we want to drill and we are ready to drill at Brewer, it's a very streamlined permitting approval process, if you will. We inform the DHEC officer in charge, and we just say we're going to drill here, here, and here, and then we drill. And then we have to properly abandon the holes as per DHEC regulations, and we do that. In some cases, like with hole 7 and in some of our other holes, quite a few actually, because we want to do downhole geophysics or do extension drilling, we don't abandon right away. But one thing that we recently announced in a news release talking about the amended option agreement is that there is a requirement for us to post an abandonment escrow fund, starting with 150,000 US dollars to the receiver. Every quarter, this will be reviewed, and depending on which holes we've abandoned, how many holes are as yet unabandoned, that fund will be adjusted accordingly. So it's a pretty excellent situation for exploration. The access to the site is amazing. The roads all over the site are very well maintained. There's obviously high voltage power lines from the former mine. There's water, there's internet, there's running water. And it's a 2-hour drive to the Charlotte International Airport. So, it's a easy place to explore. And you can drill year round without any issue.
What about locals, human and non-human? Everybody happy up there?
Yeah, folks are happy. The folks in Jefferson, it's a small community. It's a depressed economy. They had mining here. They had it for 200 years. They had it in the 80s and 90s. I get asked all the time by the community. I got a call last week from the deputy mayor. How's it going? Are there jobs available? Will there be jobs available? It's a very supportive community. And again, I think in a way, there's sort of a indirect benefit of the fact that just 17 kilometers down the road in the town of Kershaw in Lancaster County, you've got the Hale Gold Mine, and this is a major hard rock open pit underground mine with more than 4 million ounces of gold. And so the community there and the community in Jefferson are relatively close geographically. It's a pro-mining state at the regulatory level, at the community level. Obviously, everyone is mindful of the, imperative to protect the environment, and yet people want jobs. And Hale, I think, has been a real positive for the state of South Carolina. And frankly, if we do exercise our option and purchase Brewer, and Brewer becomes a mine again, I think Hale has done a lot to kind of pave the way for a relatively smooth permitting process. And by the way, Hale has wetlands, and Hale had, when they permitted it, an endangered species of clam in the water. We have neither of those at Brewer. So they did encounter some permitting challenges, and it took them a while for those reasons. And we don't have that.
Right. Okay. There's not that many people there either. I mean, it seems like there's 700, 800, 1,000 people call it in Jefferson. By the looks of it, I'm just looking at it right now. So
that's true. And it's very small.
Where are you from again?
So I live just south of Charlotte, North Carolina, in Weddington.
Okay. Is that where you're from originally too?
Well, I was born in Lexington, Kentucky. I lived in Tennessee, Virginia, South Carolina, North Carolina. My dad was a preacher. We moved a lot, lived in Florida. So I sort of identify as being from North Carolina because that's where I went to university, and it's where my parents lived for a while. But I've lived all over the Southeast, and then I lived abroad for quite a while.
Where's your accent, Leighton?
I don't have an accent. I can do it very easily, Antonio, but and all of my friends and family do. But the reason is for 7 years, we lived in Miami, Florida,
Okay.
and I was 10 to 17 years old, kind of the formative years.
Hmm.
And there's no Southern accent in Miami, I can tell you that.
All right. Well, thank you, Leighton, for an in-depth overview. I'm now actually out of questions, this time for real. So we'll pick this up in a future date if you find that porphyry. In the meantime, though, I'm traveling to an even better weather country. Allegedly. Never been, though. But I'm going to New Zealand, where I'm talking to Robert Eckford, the CEO of Rua Gold, a gold exploration company with one asset on New Zealand's North and one asset on New Zealand's South Island. Companies listed on a CSE under the ticker symbol RUA, so Rua, where an average of about 100,000 shares trade each day with a 52-week high of 20 cents and a 52-week low of 6.5 cents, not 6 cents. With a market cap of about $30 million and 193.5 million shares outstanding, today this is a 16-cent stock. There are 10 million options and 17.8 million warrants, resulting in 221 million fully diluted shares, about 30% of which, to my estimation, is in the hands of management. Since this is a relatively new company that just did an RTO earlier this month in order to get listed, going through the financials won't mean much, but according to the presentation, there is over $6 million in cash and no long-term debt. Again, this is where I typically make a couple of ratios, like the G&A to drilling ratio and stuff like that. But with this being a new company, that wouldn't be of much value here, though. Again, this is something I hope I can learn more about further on in the conversation. For people listening, though, please do head over to the company's website as well as setterplus.ca to look at the most up-to-date numbers and its official news releases and filings, because this is a non-revenue generating company that relies on the public markets for financing its needs, which means these numbers might be different by the time you're watching or listening to this interview. Boring stuff aside, though, 2 islands, 2 projects. Well, technically, New Zealand has an estimated 600 islands or something like that, but it's 2 that we'll be focusing on today. That being the creatively named North and South Islands, which I probably don't have to explain to you, but they're to the north and to the south of the country. But New Zealand is basically the land of volcanoes and earthquakes, which typically opens up the land for geological happenings, as a pleb like myself would say. The North Island hosts the Hauraki Gold Project. This is the least advanced of the 2 projects that Rua has. This is an epithermal veins target. Now, epithermal vein deposits could be high grade. Obviously, that's what the company is hoping for. And if I had to explain it in barbecue terms, you can basically imagine doing sort of a backyard barbecue in a hole that you've dug into the ground. And in that hole, you have your sort of your sauce in a pot, if you will, which in this case is again, not surely, but hopefully full of gold, silver, and maybe copper. And right below it, you have the coals sort of heating up that sauce. So you put your regular, boring, no salt, no pepper, no nothing steak on top of that barbecue. And when the sauce starts bubbling and cooking, it rises to the grill and the heat sort of cracks the meat. The sauce starts flowing through it in vein formations, and it deposits the different tastes into the meat. In this case, the meat are the rocks that are closer to the surface, the cracks are the veins, the sauce is the epithermal fluid, and hopefully the metals are the spices and herbs that infuse those meats. I'm obviously skipping important parts in the sake of simplicity, but that's kind of how I try to understand it as a non-geo. And this is the thesis that historic production was basically carried by as well. So there was over 15 million ounces of gold and 60 million ounces of silver came out of here. So 15, that's 15 for gold, and 60, so 60 for silver that came out of here historically. And a recent discovery has also been made in the region, although none of that is of course a guarantee for success. The only thing that can tell us if there's anything of merit here is the truth machine drilling. So that hasn't happened yet, not by Rua at least, but they have applied for a permit on this project. Again, something I hope to hear more about later on in the conversation. That's the North Island. On the South Island, though, is where the company is drilling now as we speak, and has drilled in the past couple of years while it was a private company, making a new discovery by drilling over 4,300 meters, with the highlights probably being on your screen right now, into what I would classify as a relatively narrow intercepts of between 2 to 4, sometimes 5 meters wide, and grades ranging between 1.7 grams up to almost 10 grams of gold per ton. This is all from the Pactolus, if I'm pronouncing that correctly, the Pactolus vein, which is also where another 2,500 meter is currently being drilled, with the hope of being able to define something that's close to what's already come out of that district historically. This has also been a historically producing district with about 2 million ounces at high grades. So over 24 grams per ton of gold has historically been mined here. Different type of deposit though, different mineralization, different geology. This is orogenic gold style deposit. Not the easiest one to explain in terms of barbecue, especially because this would be very old meat. That'd be 450 to 390 million years old, which means that it's seen some stuff happen to it, basically, specifically squeezing and folding, creating alteration and potentially being marinated multiple times throughout the ages, creating the signature taste of beautiful, clean arsenic, gold, and antimony, hopefully. That's all sort of cooked up near the brittle ductile transition zone where these now, again, hopefully golden delights reach just the right depth for the maximum flavor, if you will. And then the overarching spot where this is happening, sort of the kitchen for this was you can call it a tectonic kitchen, if you will, where regional scale folding and metamorphism set the stage for mineralization, or the taste, kind of lost in the analogy by this time. But importantly, the gold mineralization happened sort of fashionably late, which you shouldn't be to my barbecue. My wife wouldn't serve you food. But mineralization here happened after the metamorphic peak, and it wasn't crashing any intrusive igneous events, basically, which barely makes sense to me already. But in simple terms, it's a geological barbecue party, if you will, where the heat's cranked up and the flavors could be very good. But again, for Rua, this is early stage exploration, so I'd like to remind you of the disclaimer that I typically give at the beginning of the pod. But there is risk involved in this. Yet the market gives this company a $30 million valuation without too many assay results here. Relatively early stage, being private for 4 years and listing as an RTO, which sounds like a good place to start the discussion, actually, Robert. Also because people would appreciate me shutting up by now. But what do you make of this market? Why is the market giving you a $30 million valuation this early on?
Thanks, and great summary, by the way, Antonio. That was amazing metaphorical eloquence. I love the meat metaphor. It does apply so well to geology, but really where we sit today is very much an undertold story. And I know you talked about our trading history over the last 52 weeks going down to 6.5 cents and up to 20. But really, as you said, we closed this RTO 3 weeks ago, and the RTO had the public company halted at 10 cents, and it's never traded below 10 cents since we've gone live. And so the market really does like the story, and it does give it a 30 mil valuation. I think there's a number of reasons. I mean, to find an intercept and have that all publicly out there before we've even gone to market and asked for money, we're already showing results of sort of 9.41 grams over 12 meters. That's high grade in this day and age. A 12 meter is a very decent intersect, and so it's as people that look at exploration companies say, it's a over 100-gram hole, and that's always sort of a rough benchmark that people look for when they're looking at drill results. So we've proven that there is gold in the area. We're at early stages at this stage, and I mean, I'm the CEO, so I'm biased, but I really think 30 million is actually undervalued based on our drill results, just because similar sized companies out there that are finding high grade veins in less desirable jurisdictions trade at sort of a 60, 70 million market cap company.
Who would that be?
We could look at somewhere like Founders Gold, that they're finding similar drill results, and they're albeit further along in their drill program, but similar sort of results, and they're trading between 80 and 100 million. Another one we talk about would be Orion, and Orion have now gone through some changes as of recently, but again, similar drill results in Finland, a 70, 80 million market cap. The real aim, and if your subscribers want to look at where we're going, a really good one, just focused on the South Island assets that we have, is a company called Southern Cross. They're ASX listed. They're ahead of us in terms of their drill program, but they're mining the exact same mineralogy, because the New Zealand South Island, back in the early days before the dinosaurs and whatnot, was actually connected to Victoria Goldfields in Australia. And Victoria Goldfields has had historical mines like Fosterville, is everyone in the mining world wants to compare themselves to Fosterville, because you have these narrow orogenic type deposit systems you drill them out and they are narrow vein, but suddenly you'll hit the halo and you'll hit the zone that has 1,000 grams a ton over a couple of meters. And so when you find that ultra high grade area, you suddenly have a very profitable area on your hands. And that's what Southern Cross have done. And they've rocketed from the 30 mil market cap, now trading around the 200 to 300 mil market cap.
That was way before the dinosaurs. As I said, this is what, like 450 million to like 390 million years of age. So it's very old. And as a, also, you mentioned previously, you're not the first one to get there, right? And there's historical production. There's people with money already being there. These projects have been looked at before. Why do you think nobody kept exploring them, basically?
Well, I guess the historical production out of the area was 2 million ounces at 24.5 grams a ton. So yeah, it's proven that there is great historical production at very high grades. But this was done in the 50s. And so what happened in the 50s is that leading up in there, they essentially had their underground shafts. They would dig down, they'd pull out the gold. They didn't have the technology today. So a lot of it was gravity type recovery. They didn't have the rock stability, so there would have been a lot more dilution. When you pull the rocks out the ground, you're getting a lot more overbreak. And so that production of 24.5 gram a ton, that really is probably in today's terms, you would have produced that at 50 grams a ton because your recoveries are higher, because you would put it through a CIL plant. You'd have less dilution because you'd be doing mechanical stope development. And so it's really got us excited. And our geologists, when they find this 10 gram a ton over 12 meters, they don't get as excited as the rest of the market does because they're really on the hunt for that super high grade area. And it hasn't been explored since the 50s, partly because there was a period where there was an exodus from mining in New Zealand. And also then coming back, OceanaGold very much locked up most of New Zealand. They've had the biggest presence in New Zealand over the last 20 years. And it's only as they're sort of relinquishing tenements and refocusing their efforts into North America that other companies have really moved in and done well.
Something that I do want to talk about as well as we move forward. As you mentioned, though, and that might be worth getting out the way here initially, this was not a traditional listing. You did an RTO, if I'm not mistaken. More specifically, that was the RTO was completed by doing what is called a three-cornered amalgamation, which sounds like something belonging to a different kind of a website. But it also sounds like a relatively complicated way to list a company to begin with. Why did you have to do that? Why didn't you go the traditional route here?
So it's actually very simple to do an RTO, and the three-corner amalgamation is set up by the tax lawyers. That prevents a whole bunch of complications in terms of change of control clauses. And so by doing a three-corner amalgamation, you're able to combine these companies in the most efficient way possible. If you compare that to doing an IPO, for instance, the cost associated that you pay to lawyers and to bankers to do an IPO is way more than when we incurred through doing the RTO. So it was a beautiful deal where we had spent $8 million in the ground on this private company. We'd done all the boring work, and we got to a point where we were ready to really start drilling. And so when you need to start drilling, you need a bit of money. But also at the same time, when you start drilling is when you see that if you know the Lassonde curve, your early development proof of concept is all quite flat in valuation of the company. But when you start drilling, the opportunity for value creation goes up a lot. And so that was where we sat as a private company. We've had patient people, and they all put money in around 20 cents to 30 cents. So that was the private company raisings. The public company sat there as it was previously called First Uranium. They raised $10 million for a phosphate deal. That phosphate deal didn't pan out. The phosphate market went south on them. This was about 2 years ago. And so quite sensibly, they put the asset on hold. They actually sold it. And they sat there as an empty shell, no debt, no management, no G&A fees, or very minimal G&A fees to maintain its listing. And they sat there and they had $7.5 million in cash. And it took them 2 years before they really married up and found an asset that they were willing to get behind. And remember, the last 2 years has been, as you know, extremely difficult for any mining company to find financings.
Hmm.
They would have had everyone throwing themselves at them. It wasn't until they came across our assets at Rua Gold that they thought, this really has great potential. We really like where gold market is right now. We like what's happening in New Zealand, and we like these assay results that are coming out. And so we partnered with them at a zero premium, zero discount deal. It was straight based on the last financing that was done. And we ended up with a shell. We had to pay approximately $500,000 in legal and bankers fees to actually get the deal done. But to raise $7 million or $7.5 million and only have that much leakage is actually very good in the junior market space.
What I'm thinking about here, though, is basically the shareholders who bought, well, it's called First Uranium, so I'm going to assume there's uranium somewhere in the history of the company. But the shareholders who bought that or potentially got in after that on the phosphate deal, they're still in there. How do you control them maybe getting out, or especially given the share structure, coming close to 200 million shares outstanding early on in the journey for itself? How do you control the current shareholder base is what I'm getting to.
Yeah, no, that's a great question. And we had a period. So we announced this deal in July 2023, and that's when the First Uranium shares went on hold. We had a period from November last year all the way up until end of February when we announced the deal and closed the transaction. I was literally doing video calls with all the shareholders of First Uranium and explaining what Rua Gold is, why it was attractive, and understanding, like, I get you went into this company on a phosphate deal and now you own a gold deal in New Zealand. It's not what you wanted, but really here's the potential. And we were able to explain, which we can do as we go through this process, we can explain the near-term catalysts as to why to hold on and see what we do over the next near term and test us out and see if we're worth being backed by you guys. And when we've gone public, it's been nice to see that the selling actually had been fairly limited. As you said, at 193 million shares are outstanding, and what we've seen trading is quite light, average of 100,000 shares a day. That's pretty good. So if we take a step back, we've done a great job and giving myself a pat on the back here. We've got a great job explaining the story to everyone that's in the company and selling the dream that we're really close to finding a catalyst that will recognize value for them. And at the same time, we're busy going out and as we met last week, we're going out and trying to do marketing and get the story out there, because there's not many tier one jurisdictions with a lot of gold and elephant type discovery opportunities that are out there in today's market.
That's also something I want to talk about, is to plan to further tell that story. But first of all, why Canada? I mean, a project's proximity to the ASX would make you think, let's put this on the ASX. I'm hearing a little bit of an accent too. So why not ASX?
Yeah, so I'm a New Zealand born. So I was born there, but left and did a lot of work in Australia. Australia is a big mining capital of the world, just like Canada. And so yeah, no, ASX definitely is an opportunity for us, and it's not something we're closed to. But really, this private company was funded by a very well-known group out of Toronto. We've got Oliver Lennox-King as a chairman, New Zealand background, but lives in Toronto now. And Cormark Securities were a big part of bringing this together. The actual brains behind amalgamating these assets together was a geologist called Tyron Breitenbach, and he started this while he was an analyst at Cormark. And so he came across the assets, saw the opportunity, and really all the institutional and retail shareholders that have come into this have predominantly been out of Canada. And then that's where it makes sense to have the Canadian listing, because that's where our supportive shareholder base is.
Right.
Going forward, we definitely see great liquidity. We definitely see merits to being in the ASX, and maybe preempting your question, the next marketing trip we do is going to be down in Sydney at the Roundup conference. So it'll be interesting to see what the take is from the Australian investors.
Okay. Are you planning a double listing or just moving completely?
It would be a double listing approach because we
Okay.
do have strong support in Canada as well.
How much would that cost? Any idea on the cost?
We're just in infantile stages at the moment, so that needs to be considered in the light of making sure we have enough money in the ground and not too much ending up in listing fees.
Right. That's something I also wanted to talk about, as I mentioned at the beginning. I typically do a ratio between G&A to money that's growing in the ground. Maybe we can talk about that. The money that you have right now, how far does it get? How much is it left? Like, is it still 6 million? First of all, let's start there. But also, how far does it get you in terms of drilling, and what part of that is going to go to G&A? That's a lot, I know, but yeah.
No, I mean, it's a very easy one because I feel like I'm an accountant by background. I'm a chartered accountant, but I've lived and breathed mining all my career, and so all I do is look at budget allocation and making sure the money is being spent in the right place. And so very transparently, it's just me in Vancouver, and I've got a fractional CFO that supports me in all our compliance work. And so that's a very good use of funds because we're a simple company. We don't need the complexity for a full-time person right now. We don't have an office. We've got some great partners that allow us to use offices. So we lower our G&A cost by not even taking an office. Because my job really is storytelling, and I need to be sitting on Zooms or sitting on the other side from investors and telling them what we're doing. So G&A cost, to put it in dollar terms, because I can wave my hands all I want, but roughly speaking, G&A costs, including listing fees and keeping up with our compliance, is close to about 500,000 to $1 million a year.
What's a wide range?
Pardon?
That's a wide range. What is it going to depend on where you're going to list?
It'll depend on where we're going to list. It also depends on, right now we've got $6 million in the bank. We're looking at doing a shelf prospectus, which incurs lawyers' fees. It's going to incur technical fees to have a shelf prospectus out there. But on the opposite side, it gives us quick access to capital. So if we are in a good position where we have a nice drill results coming through and we see some real interest in the market, and we find an institution that suddenly say, I want to have a lead order for a couple of $1 million, we're able to fill that in 2 weeks' time, as opposed to having to go through a longer process. So it's opportunistic to make sure we can capitalize on what we expect to have good catalysts coming to the market.
Okay, so if it's $1 million on G&A and you have 6 million, the rest of the 5 million, okay, the rest of the 5 million is going to go into the ground, so that would put you at 84% of the money that you have right now going in the ground. If I'm getting that correctly, right? Because 16%, 1/6. Yeah, I'm thinking.
Yeah, no, and roughly speaking, that is the right thing. I will caveat that we do have another $1 million earmarked, and it's not over a specific time. It's just saying that of that 7.5 million that came in the shell, we've guaranteed that counterparts that we'd spend $1 million on marketing. And marketing gets a very bad name in the world of junior exploration. But at the same time, you have to do it because otherwise you end up with more dilution. If we're releasing great drill results and we're getting good news out to the market, but there's no market watching us because we're not spending any money on marketing, we're not spending any money on getting eyeballs on our story, then we're not going to see the share price react like we should be. And so it's not a time commitment money. So it's not to say that we're going to spend it this year. It's doing smart strategic marketing campaigns at the same time as we're releasing drill results or getting permits in our North Island to make sure that we have enough people following the story, to make sure we have a supportive share price. Because as you know, every exploration company has to go to market to raise money at some point.
So it's $1 million G&A and separately $1 million on marketing is what you're reserving from that 7.5.
Correct.
Okay. Management information circular is also not relevant. I mean, it's relevant to it's from last year, right? So it doesn't make sense. What are you budgeting for management pay here?
So that's all included. So I'm currently on 240,000 Canadian. It's a good salary, but it's a huge cut from where I'm leaving. And I don't say that as a sympathy card. I'm doing this very purposely because I really see I get a bigger equity stake in it and a bigger upside potential because I want to grow something. I'm coming out of a position at Aris Mining. I started Aris Mining 4 years ago with Neil Woodger and Frank Juster and Doug Bowlby all behind us. And we've grown that from a $5 million shell. It is now a 600 odd million market cap company, TSX and NYSE listed. And so it's great. It's a producer. It pays a great salary, but it doesn't have that equity upside that I really find attractive out of this. So that's my situation. As I said, I've got a fractional CFO. She's paid on a 20% basis. So I get her for 40 grand a year, which is a complete bargain. She comes with an amazing background. She just actually was the CFO for Great Bear Royalties and the director of finance for Great Bear. So her and I have a great relationship, and she also sees the equity potential here. So again, not doing it for the base salary, doing it completely for the equity side of it. And then all our directors get paid 100% in equity. They get paid 75,000 a year in DSU payments, which means deferred share units. So only when the directors get bought out through a change of control, or they leave or rotate off, or the company evolves, we can then issue DSUs and settle them in equity or cash, depending on where we sit in the life at that time. But it's the company's discretion to pay the directors of the company completely in equity. And again, if you look in the board, no one in that board is doing this for a 75 grand a year paycheck. They're in a very fortunate position where that money does not mean much to them. They're really, again, in it for the story.
Just getting me think for a second where $75,000 doesn't mean much to you. Kind of a dreamland scenario for you, but a good point. Where when do these RSU or DSUs that you mentioned, when do they vest? What's the timeline?
They only vest once they cease to become a director. So they just keep building up DSUs. They can never sell them in the market. They never get paid them until they cease to be a director. And then they all vest. And at that time, we can give them shares. Or if we're in a different cash scenario, we'd give them cash.
Okay. So at least a year, basically, until the next annual meeting.
Correct. Yeah. But these directors, again, they're in it for the long run because they've been around for the private company. They've been around for 4 years as we've built this from nothing. And so they really want to see that there's no point in them leaving in the next year when we're just kicking off the story publicly.
And you were head of finance for Aris, or you are right now? Are you quitting that? When does that end? When do you go full time on Rua?
Correct. Yeah. So that one ends actually end of this week. So I gave my 3 months notice. I'll be there till the end of March, and then come April, be full time into Rua.
Okay. Is Neil happy?
We are very happy. Yeah. It was a great time, and I've worked with Neil for the last 8 years through the last company as well, Rua Gold. Started that from nothing and finished that at 600 million when we sold that to Equinox. And I loved working for Neil. He's such a great mentor. He's taught me a lot about managing risk as well as discipline in the mining space, which is a very hard balance that people have. And so it's been a great learning curve, and he's very excited to see me branch out on my own.
How many shares do you own personally now? I believe last thing I saw was something like 400,000 on the initial management information circular. How many do you have right now?
That's correct. So I came into this story quite late, to be honest. I became a director of the company last July when they closed the RTO, or sorry, when they announced the RTO, and the stock was all halted up. And so I actually haven't been able to get my hands on any shares until we've been publicly traded as of 3 weeks ago. So all my share accumulation has been public market purchasing, anywhere between my best purchase was 11 cents, my worst was 20 cents. I think my average cost at today is about 15 cents. But that 400,000 was all purchased on the open market, and my SEDI filings are all out there.
Okay. What's your average cost of capital?
Approximately 15 cents. Sorry, cost of capital personally, or my average buy price of the shares?
Well, yeah, personally. I mean, you threw out all the shares that you have right now, basically.
15 cents, yes.
Okay. 15 cents. Good. This might also be an interesting point actually to talk about strategy. Because where I'm coming from with these questions is trying to understand how you're going to make money on this so that I can understand how aligned you're with shareholders and how eventually shareholders or potential shareholders are going to make money on this. Because most of your direct experience in the mining space, as you mentioned, is with producers or being a part of the team that builds a gold producer and then sells it. But I don't assume that's where you're looking to do here. Or is that still the plan, like sort of build it from the ground up until it's producing and then sell it? Or do you think a transaction earlier on is more realistic here?
No, and that's a very good point. This board and management team, not me alone, this board and management team all come from producers as well as explorers. I mean, COO Simon Henderson is a 40-year veteran as a geologist, but Oliver Lennox King built Ross Gold from nothing into a multi-asset producer. Paul Criddle was his right-hand man as COO. I come from a long background of working on mine sites, producing copper, gold, silver. So I try and explain it as 2024 is the exploration story for Rua Gold. We've got a drill campaign planned where we need to prove concept. We've done all the pre-work over the last 4 years, and we have drills turning, which, as you eloquently put, is the real truth serum. And so once the drills turn and we prove our concept, we expect our paper to re-rate to a higher price. We expect to be at that 100 million valuation if we can really prove to the market that the concept is correct. At that point, we do have a number of opportunities that are very close to us that would be a much, I'd say, a very quick driver to coming into production a lot quicker. One of those, I mean, I'm not going to give away too much, but we definitely do look at those around us and whether we can get into production sooner than the normal exploration company.
And that's potentially got something to do with New Zealand's new regulations, or because you say you don't want to say too much, but
it's not it is very supportive government there, and they are very good at permitting a lot quicker. So there's a new bill being passed through the New Zealand Parliament right now that actually fast tracks permitting there, makes it a 6-month process as opposed to some other countries you see in the world where it's a 2-year plus process. So it's great to see a supportive government that say we really want to create jobs and push economic development in New Zealand. They're facing very close to a recessionary economic standpoint right now in New Zealand. And so they're trying to change that through policy, which is really great to see. But yes, there's that opportunity. But really, we've also got very near-term producers very close to us in our South Island. And it totally makes sense that a partnership could exist there if we can find some sort of agreement as to how we go forward.
How long should something like that take? Because you're talking about something quicker. You mentioned the Lassonde curve earlier. Looking at the Lassonde curve, typically to go from the first stage where you're at to the next stage would be something like a 5-year thing. What are you thinking? A 3-year thing, or like how quickly would that happen?
I would say we should be. I'd encourage people to watch us over the next 24 months.
Okay. That's
Yes.
that's an aggressive thing. Yeah, I mean, you say you cannot tell me too much, but it'd be interesting to see how it develops. Hopefully we can get some updates along the way. What last sort of corporate question before we go to the geology, right before we have to leave here. What happens in the meantime in terms of marketing? You mentioned $1 million. That's a lot of money in marketing. How do you make sure that it's not squandered and that it goes to the right places where it generates the most shareholder value here?
That's a great question, and I rely heavily on one of our board members, Mario Vetro. He's a veteran in marketing. He's done this a number of times in the past. He was the founder of K92 Gold. That started at a $2 million purchase from Barrick, and at its high was a $2 billion company. And he helped get that off the ground as a founder, and he's tried and tested a number of marketing strategies, and he's got a formula that really works. And by doing that, we focus a portion on the German market and the European market. We have a WKN ticker there. We have another portion that goes to the US market, which will focus on our OTC ticker. And a lot of the US we're seeing really get interested in gold at the moment. It's a bit of a scary place down there. The politics are far left and far right, and people want a safe haven for money. And so we really see a lot more interest in gold and gold equities in the US. And so a portion goes down there. And then, of course, we maintain a portion of marketing spend here. And so when you spread it out amongst the three jurisdictions and you really build your shareholder base broadly, it's very important to do, because one thing that's a lot of investors look for is liquidity, and they don't want to buy a stock that's illiquid because they worry they can't sell it in a short order. And so you have to have a broad base of investors and get the story out to that broad base, which is why we incur the costs of the three tickers across the three different markets. And it's why we spend on marketing, to make sure that we're an easy story to invest into.
Right. And so that's a combination, I assume, of conferences and then what, online marketing and oh, I saw you did an investor lunch here in Brussels actually just a couple of weeks ago. I saw you in Switzerland, so I assume it's that type of thing.
Exactly. Yes. Yep.
Okay.
Yeah.
Sure.
It's making sure I can get the least amount of spending to get my voice to hit the most amount of ears is really what the aim of the game is.
Good. I know you have to run in about 15 minutes, so let's just jump right into the geology. I know it's kind of an abrupt stop, but I'm thinking let's talk about the orogenic gold part of that be the the South Island?
South Island,
right?
yeah.
South Island first. That's so orogenic gold systems, not a geo here, but as far as I understand it, they're typically associated with faults, shear zones, or folds. What are the structural characteristics of the Pactolus vein, and how does that tie within the regional scale? As in, does it check out on on the broad thesis here?
Correct. Yeah. No, and that's a great way to start this. I mean, we purchased these assets 4 years ago, and we hired Simon Henderson, an amazing geologist based in New Zealand, as we went through that process. And these mines had historical workings, and the easy thing for Simon to have done is say, okay, we know that there's historical workings. They took out high-grade gold. Let's just go on to the workings. It's brownfields exploration. It's a very low-risk thing to do, but because we were private, because we had time on our hands, we didn't have to get announcements to the market to keep them interested. We were really, we had time on our side. And so he's made best use of that funds by doing a complete blank slate of the whole area. And we hold tenements over 50% of that area. And it's very highly prospective region. And he's gone and done a complete first principles exploration analysis. He's done 16,000 soil samples. He's done geophysics. He's flown the drones and done the UAV magnetics testing. And by doing all this early exploration work, which I'll add the market hates because you have to be so patient, he's managed to find a completely new anomaly, which is called the Pactolus vein. And so when he found that by doing this early work, we first did a channel sample on the surface. And that channel sample on surface, we're finding 16.4 grams over 7 meters. And so it's exactly the same as what they would have found in the olden days when they historically mined an average of about 150 meters of depth in that area. And they would have found this gold on surface, and they would have dug down and taken out the near surface gold. So it confirmed the characteristics are all there. We've got gold in quartz, which is exactly what we expect to see in an orogenic type vein system. And we started drilling there, as you highlighted at the start. We've done 4,400 odd meters there. And that's where we found the initial drill hole highlighting 12 meters at 9.4 grams a ton gold. So that's our number one target because it's brand new. It's somewhat greenfields, but it's now a new discovery. So we've proven the gold's there. And we've got drills turning there today. We've had drilling continuing since November last year, and we expect news from that drill program to come out in mid-April. So again, encourage your viewers to be watching what comes out of that. That's our phase 2 drill program, where we're trying to work out the orientation of that vein system.
Looking at the age of the rocks, and generally orogenic gold deposits typically relatively complicated due to the way they get mineralized, especially if it's that many years, multiple mineralization events at times. Sometimes there's nugget effects and grade variability. Looking at what you've reported so far from drilling during the time you were private, it looks like there is some grade variability and width variability too. Nothing crazy, but still you go from what is about 2 grams to almost 10, as you mentioned, and then from under 2 meters to over 12 meters. So there is some grade and width variability there. What are the geos telling you about the spatial distribution and maybe the controls on the grade variability here?
Yeah, and that's a great analysis, especially for a non-geologist of our drill results there. What we found from that campaign is that we had the orientation of the veins slightly off in our model. It was much more north-south directional than we had expected. And so when we've gone into phase 2 drilling now, we've gone a complete north-south, because those outlier drill intercepts that you talked about there, they were on the far left and the far right of the drill program. And so really we've got a much more north-south orientation, and this is a proof of concept for in our second phase that we've now got the right orientation of the Pactolus vein.
Hmm.
If on the chance, I mean, it's geology, so it's all a science-based approach. Simon is one of the best geologists I've met. He's got plus 40 years experience, so he's not new to this. But should it not turn out as we're hoping at Pactolus, then our next phase of drilling will be to moving into some of the older workings and going under the old workings. Without getting too much into Federation Mining, they're a company just south of us, 10 kilometers south. They own the Blackwater mine. And one of our slides in our presentation shows the sort of columns of mining at depth. And that's exactly what they did. They got a small piece of land 10 kilometers south of us that had one old mine shaft in it called Blackwater. Historically, it was mined down to 700 meters. They've now done a decline and done underground exploration from the bottom of that down to 1,500 meters. They found mineralization. And so they now have a 43-101 resource, 700,000 ounces at 23 grams a ton. So a very nice high-grade ore body, and it's all underground, under the old mine workings. We've got 4 old mine workings on our properties. Each had a higher grade production when they were in production phase in the 50s. And so if Pactolus vein from this phase of drilling doesn't turn out, we've got a very good opportunity to pivot and move into our old mine workings and start doing exactly as Blackwater did and go under the old workings.
Blackwater, by the way, I'm glad you're bringing that up, is because if I'm not mistaken, it had to halt operations somewhere in the 50s, 51 or something along those lines due to the collapse of one of the shafts. Was that due to the structural instability of the surrounding rocks, or like what happened there?
Yeah, that's completely right. This is challenging rocks. I mean, these are 400 million year old rocks. They can be brittle in areas, and the technology back then didn't support the stability that we have today. And so it's definitely not a risk anymore, because you put seismometers on there. You can really monitor the rock stabilities much better in today's technology world. And so you can manage that, and it's just part of the cost of doing business these days. And that's anywhere in the world, not just New Zealand.
That's something I would like to see in action one day. And I'm almost self-inviting myself to New Zealand, which would actually be awesome to come to think of it. But it's a good point how technology has evolved over time. I don't have anything to push back on because I don't completely understand what's happening there. Talking about maybe some of those rocks, gold in organic systems typically associated with arsenic, antimony. Are you doing any metallurgical tests to make sure that the arsenic is not too prevalent or something along those lines?
Yeah, and we do it, and that's a great point, because arsenic actually highlights where the gold is as well. So we use that to our advantage. It's not a complete negative, but we rely on two things really. The fact that there's a lot of free gold, and so about 50 to 60% of the gold actually comes out through gravity, no use of chemicals. You can actually just put it through a gravity circuit and recover a lot of it. And then the final piece has arsenic, and it goes through our CIL plant. but it's not a level of arsenic that it creates problems in it. And there's no, as they say in the metallurgy world, there's no preg robbing where they steal the gold as you go through. It's at a manageable arsenic level from what we've seen. And we're not at that phase of doing MET testing at the moment, but we do look at the MET testing that people like Blackwater have done as they've released their 43101, and we see that it's a friendly amount of arsenic, if I can put it that way.
Is that the same lithology though? I mean, is that set in the same type of rocks, the Blackwater mine?
100%, yeah. It's all the exact same mineralogy throughout that whole region.
Okay. Is that the lithology here that you say throughout that whole region, is that also corresponding with your thesis and what kind of alteration system you're working with here? Because it sounds like I know what I'm talking about. I don't. I just know that alteration systems are important when it comes down to orogenic deposits. So that's where I'm coming from.
Yeah, and again, I'm a finance guy, I'm not a geo, but let me try and put it in my layman terms. Essentially, the plates, as you said, had the mineralization. The plates move and they get pushed together, and it ends up with these folds that go up and down, up and down. And so you have these multiple folds that create all these individual underground mines. And so they all are exactly the same mineralogy, and they all just come in these different folds. And when it folds up, the middle section is where you see the Earth's core coming through those folds and creating all those rich bearing minerals coming through. And so that's my layman's non-barbecue type metaphor, that I imagine it always as a fold of paper and the minerals coming up through those folds.
Fair enough. I think if you're a geo, you could just lie to me and I wouldn't even know. So thank you for not trying. But so basically a couple of unknowns here potentially to be answered by this year's drilling. You're now drilling, what did I say, 2,500 meters?
Correct. 2,500 meters planned this year, and we're reserving some cash as well for our North Island asset. The geologists get much more excited about the North Island asset because it's structurally less complex and much easier to drill. And at the same time, it's right alongside a brand new discovery from Oceanic Gold, which gives it a huge merit and definitely warrants reserving some cash to make sure we explore there as well.
Well, I'm hoping the 5 million bucks that you told me it's going to be left after marketing and G&A is not all going to go on that 2,500 meters, because that will be what, 2,000 bucks a meter. How much are you paying actually per meter there?
So including all the assays and including all in, we're planning. So drilling cost is 500 meters. Drilling, assaying, moving the drill rigs onto site. That's $500. I should clarify, New Zealand per meter, which works out at about 400 Canadian or 450 Canadian, depending on what day you're sort of looking at the exchange rate. So a very competitive drill price. I mean, it's year-round drilling. There's no mobilization, demobilization type costs. There's drill rigs in the area because New Zealand has a long history of mining. They've got mines that have operated there since the 1800s. So they do have a long history. Not many people talk about New Zealand, but it does have a long history of mining there.
Okay, that's 400. Yeah, I was just looking at it, 407. It says Canadian a meter. How do you move the drill around? Because it's a mountainous region, if I'm not mistaken, looking by the pictures on your website. Do you use a helicopter, or because it's cheap? So I don't know.
Yeah, that's correct. It's helicopter driven. So you put the helicopter onto the drill. You put the drill under the helicopter onto the pad, and you do your drill program off there. And then at the end of your drill program, you come and pick it up with the helicopter and move it back. And then the team usually walk the mountain path to get to the drill rig. And even with the helicopter on and off, that serves two purposes. One, it gets us there quicker. But two, more importantly, it means we can get permitted very quickly because we cut down hardly any trees. So we tell the New Zealand government exactly the number of trees we're going to cut down before we run an exploration program. It enables us to then be a bit more flexible and letting us use the helicopter to drop the drill rig exactly where we want.
Okay. news, what are you thinking in terms of news? May, April-ish, or is that too early?
So no, April, we plan to have drill results from this Pactolus exploration program coming out. And so again, I encourage your viewers to see how that pans out. We're then going to continue drilling through the year, and we'll have constant news flow of drill results coming out from the South Island there. The North Island, which we haven't touched on nearly enough to give it warrant to what that asset is. I'll just touch on it because it is a huge part of our portfolio, and it's an ode to Simon, our COO. He's worked in New Zealand for 25 odd years. He worked on the North Island predominantly, and he was on the discovery team and actually staked the land that found a huge discovery that Oceania have called Wharekirauponga, or they shorten it to WKP. That discovery intercept was 23 grams over 49 meters. It's an absolute beast of a discovery. And Oceania Gold, as recently as 2 weeks ago, actually announced the fact that they've doubled down and they're going to develop it into a mine now. So they've already proven up a resource of about 1.5 million ounces of gold at 15 grams a ton. Again, we're talking high grade area, and they are 2.8 kilometers south of our tenement Glamorgan. And so very prospective area. Simon found WKP. He knows the geology, he knows the area, he knows the stakeholders and the communities, which is very important to be operating sensibly in this day and age. And so what happens in New Zealand is that you have 10 years to get an exploration permit and convert it to a mining permit. And if you haven't done that in 10 years, you actually have to hand the tenement back to the New Zealand government. You relinquish it. And so Oceania Gold had locked up most of this area and monopolized it, and they were sitting on these exploration tenements. But as of the end of 2022, they got to their 10-year cycle. They were able to convert the Wharekirauponga deposit, the WKP, into a mining permit. But they hadn't worked enough on Glamorgan, which was 2.8 kilometers north of that. They didn't do enough work on that to convert that, so they had to relinquish that. Luckily, Simon, who has a huge contact network there and a huge knowledge of the area, saw this coming, and the day it was relinquished, we put an application in, and for 4,000 New Zealand dollars, we got permitted this tenement. But from a finance perspective, it's what we'd call a free call option. You've got a very prospective piece of land that we've paid, well, arguably nothing for. And it's already, we had boots on the ground last December. We're already finding rock chip samples there of 95 gram a ton material. Simon's already found the alteration zone, which match 100% the characteristics of what they see at WKP. He's found it on Glamorgan. And so we're definitely reserving some funds towards the back end of the year to make sure that we can drill there and again, hopefully find the same success that we found at WKP, or Oceania found at WKP.
My wife was showing me a ski vacation that was costing $4,000, and I said no because I thought it was too much. And now you're calling it arguably nothing, and she's gonna hear this and she's gonna be pissed at me. So thank you for that. Well, what about the locals there though? You have to convince them basically to start drilling, or like how does that work? They want you there, or?
So a lot of the land is owned by the Department of Conservation, which is government run, and so they want to know that that you're going to be sensible and you're not going to be open cast mining, and you're not going to be cutting too many trees down. And that's where I say the helicopter drill program is very effective, because it demonstrates to the government you're doing it in a very sustainable way. And again, an ode I can't rave enough about Simon, because he's been working in the area for so long. He's done so many of these exploration permits, and he has such a good reputation, both with the iwis, which is the Maoris and the locals in the area, as well as with the government, that people trust him and know that he's not going to do the wrong thing by the local communities or by the environment. And so it's a very friendly and back and forth permitting process to make sure that everyone's aware of what we're doing and that we're building long-term stakeholder relationships.
Right. Is there a royalty on on either of those projects, by the way?
This is all encumbrance free, so no royalties apart from your normal taxes, and there's a 2% royalty to the government for extracting gold there.
Right. Okay. So, okay, just a quick recap. You're thinking April drill assays from the South Island, and then what potentially later on in the year news from the North Island that you've gotten the go ahead to eventually start drilling. That's when you're okay. So that's when you're going to be using that capital that you said, preserving a little bit of capital potentially to drill there.
Yes.
Do you think you're going to need more money this year? Like, are you going to go out and raise more money to add on?
We definitely don't need more money this year. This is a fully funded drill campaign that we've got on both North and South Island that's been defined. If we're getting good drill results, if we're seeing great traction in the market, if we keep seeing all-time high of gold prices keep ticking along and a flood of investors, or if we find ourselves a strategic investor that we really want to partner up with, we're definitely going to have the shelf prospectus ready and able to tap into, because we also don't want to run our bank balance too low, because that's where you get predatory financing. You start issuing full warrants for 5 years, and it dilutes the capital structure too much. So it's a balance of not needing money and being in a fortunate position, but at the same time being opportunistic when the market is favorable, as well as we're getting good catalysts and good news results out there that will tap the market for sure.
All right, thank you, Robert. I've not been respectful of your time, as I mentioned, so I'll let you go. Good luck and keep me up to date on this. But I'm really looking forward to this next conversation here because now I'm traveling to an even better weather country. You see how I structure this to go up by market cap, but also to go up by degrees. I'm going all the way to Cote d'Ivoire. Not doing a full company overview on the next company here since I've interviewed Andrew probably half a dozen times, Andrew, probably more than that over the last year. Fair disclaimer and honest confession, though, I do own shares of this company. This company is also a paying client of Resource Talks, and I am talking about Awalé Resources. Ticker symbol is ARIC, so ARIC on the Ventures Exchange in Toronto. This is a copper gold exploration company with a very large, so almost 2,500 square kilometer land package in Cote d'Ivoire, where they've made 4 discoveries over the recent past with a significant, very significant, almost 1,500 gram meter intercept at one of their main targets. That was this week after a roughly 150 gram meter intercepts at one of their other targets the prior week. So it's been a busy week, and it pushed the stock to over $1 at one point. Looking at it from since I've sort of been involved with the story, it went from a low of 10 cents late last year to somewhere over $1. So still only about $50 million in market cap, though. Newmont owns over 50% of this company, also has a JV with Awalé on about 30% of the land package, where Newmont pays for the work and Awalé operates the land package. So Andrew here basically directs the drills. And Newmont, as far as I understand, has also given them a roughly 25,000 meter exploration budget for 2024 to follow up on all of these discoveries. And of course, in an effort to earn into an interest, again, something we can talk about more further on in the conversation. But Andrew, you've been hot commodity right now. It was not as easy to get this call here with you, so we're doing it on a holiday. How many hours have you worked over the last couple of weeks?
Well, I was at the Zurich conference the week before, talking to a lot of people, and then from Monday, I think from Monday, I guess my meetings have been starting at 9 in the morning and going through to sort of 10 o'clock at night. So pretty full, not a lot of breaks in between to actually. So yeah, that's I've done a lot of talking for the last week and the week before, and but it's an excellent opportunity to put the company in front of many different people and get not just make them realize, or let people know that it's not just about, I mean, I'm not complaining about the Charger drill hole at 1,500 odd gram meters, but there's a bigger thing at play here, and it's an opportunity to get that bigger picture across to people that we've actually been working on this for a while, and we've developed a much bigger picture about what's going on, and it's wonderful that you get wonderful to get a drill hole like that, but it's part of a bigger picture.
Definitely something we're going to be talking about. I'm going to try and better wrap my head around the broader geology here that is at play. But who's calling you? Give me a couple of names.
It all rolls into one. But you
Yeah.
know, look, a lot of the bigger funds we've been talking from small to very large funds throughout the week. And now we're actually starting to get a lot of interest from the Asia Pacific countries. So, you know, during the week this week, I'll have talks with guys that I actually know from back home, and others that I don't know. So they're starting to show a lot of interest as well. So you know, it is wonderful to create so much interest around the company, and like I said, it's a fantastic opportunity to get that. To get the bigger story across, which is that we do have a very large play. It's not just about the recent results that we've had.
But the people down under are paying attention too.
Yeah, absolutely.
Okay.
Yeah.
Well, there's one person I for sure want to be paying attention here, but I don't suppose that's something you can tell me more about. What about Newmont though? You probably spoke to them as well. What are they telling you now that they've seen this hit?
We've actually agreed to talk next week when the dust settles. So
Okay.
I've got to talk with the Newmont guys lined up for so their understanding of how full my diary has been, and you know, there's no rush. We've got budget. We're ready to start doing some more drilling now, which will commence, which is imminent, and so that's all okay. So we'll just we'll come together, you know, a bit later when the dust settles, and rediscuss where we are.
Mm. Why I'm asking you this is because I'm wondering how this whole story basically unfolds with Newmont specifically, because you have I'll put the news release that was May 31, 2022, that you actually announced a strategic investment from them, as well as the JV with that describes the entire option agreement. But it's at one point here says up to 15 million in stage exploration funding to earn up to 75% of the ODNA project. And what I'm wondering about is timing, and also what happens in between that timing. And so maybe that's something you can talk to me about as well. Like, is there a possibility that they don't even go up that far, and that they basically make an offer for the entire company before they've even gotten to that 15 million spent?
From a company perspective, I mean, they own 15%. We don't have to accept their offer. If that actually happened, I can't, you know, that doesn't really make a lot of sense to me though, because they have particular hurdles that they need to meet with what they, I guess, what they need as a project. And I don't think the Newmont is really in the business of acquiring something that's still an exploration play. So they're in the business of acquiring things that are either, you know, had full feasibility and are looking for something to be taken into production, or buying producing assets. I don't see them as being in the business of buying, you know, something that is still in an exploration phase. And I think their shareholders would be wondering what was going on if they were, you know, trying to buy an exploration play so that's my, you know, my take on it. So yeah, not that you don't think about those things, but that's my take on you know, whether there be some sort of near-term aggressive takeover or something like that. That's sort of not in Newmont's playbook.
That makes sense to me, because specifically because of the operational aspect of it. Like, they're not primarily explorers, as you mentioned, so maybe they don't want to do that. But if I understand correctly, at one point in that contract that you have with them, they could become the operator of the project. Do you think that's probable, or do you think that you stay the operator of the project up to PFS or potentially first pour?
Look, I think probably, you know, at that feasibility stage, potentially they would start to think about it. But look, I don't know. I know that my discussions, there's no appetite for that right now. And you know, we've been doing a pretty good job. So we've taken a completely grassroots project with no drilling at all. The company had done around about 8,000 meters of drilling before Newmont came on board, and since then we've taken that up to 30,000 meters. As you mentioned, we've made 4 discoveries, and the Charger and BBM are looking very nice right now. And then up behind that, there's Scepter coming up behind that, and then Empire will come back into play as well, because we only drilled it down to a depth of about 120 meters vertical as a junior company, looking at what our cash position was and things like that. So it's open down plunge, and we've got offset indications in the drilling that we did as Awalé. So that will come back into play as well as the project progresses. So I think there is definitely satisfaction on the side of Newmont that we have the technical capability to bring things from complete grassroots through to drilling and discovery and then taking them on into the next phase. So there are guys, there's myself and other senior guys within the team that have worked on feasibility projects, and so we also know what's required for those sorts of things as well. Clearly that's a much bigger job, a lot more staffing, all those sorts of things, but been there, I've been through a few of those in my time. So, we can take it that far. But I'm talking too much, really. Basically, in a nutshell, yes, they can choose to operate, but at the moment, there's no appetite for that.
They do pay you, what do they pay you, a management fee or something along those lines?
Yeah, it's a minimal management fee, and it's between. I mean, the contract's all there on the CEDAR, but it's depending on the contract size, it's between 5 and 10% of what the spend is. So it's not, it's not very, it's not a lot of money. It's not something that actually covers, G&A and things like that. And we've got an office in Abidjan to run as well, and things like that. So. Yeah, there is a management fee, but it's it's not actually, in the scheme of things, it's not a significant amount of money.
Well, it's something, I suppose. It's
oh, look, I'm not complaining.
Yeah.
yeah.
You get to drill your own drill holes on someone else's budget, and they pay you a management fee. That sounds like a good deal to me. But what I'm mostly wondering about, and approaching this from an inexperienced pleb situation, is like, if I were Newmont and I saw this hole, knowing that I only have like 30% of this land package that you put together based on the thesis that you also drilled this hole with, I might start getting a little like FOMO, like, oh, I only have a small part of this land package. Let me make a bid for the rest of that land package. Is that something they'd be doing, or like not how they approach it?
Yeah, I think same. As I think that just comes back to the comments previous. Like it's not in their that's not in their wheelhouse. So I see us as now sort of being able to position ourselves to add value to the company in that surrounding land package, or the land package that's on strike. So and they're interested in that land package. There's no doubt about that. But for them to try and sort of buy it from us or something like that, I don't really. Yeah, that's just not in their wheelhouse. It's ours. It's not theirs.
Yeah, no, but sort of on maybe on the same JV conditions. Well, I don't think they're going to be the same. What was your market cap when you initially went into that JV with Newmont?
I think
5 million-ish, something along those lines.
4 or 5, around 4 or 5 million. I think the capitalization of the company was at that stage.
Well, so it's 10 times higher right now. So I assume you have more of an upper hand than you had back then.
Yeah, look, I do look at it that way. I mean, we're never going to be a stronger hand as Newmont, but we're certainly not a junior with our cap in our hand. So, that certainly does help from that perspective. We don't, we really like having them as a partner. They're a good partner, and we have an excellent relationship from a technical perspective. They're technical guys. Musi, Paul, and others. They're aligned, and when we talk about milestones and what needs to be done, there's agreement, and then we just go ahead and go about our business. So it's
Right.
it's a good relationship from the boots on ground, or at the joint venture level. We're aligned. Yeah.
All right. Well, enough about Newmont. I think they get enough promotion as it is. Let's talk a bit about the geology and the core that you've been pulling out of the ground with the recent drilling, and how it's all maybe changing your idea of things or not, or confirming your thesis. And I have discussed that at depth before, but I'm sure there's a lot of people watching now, sort of for the first time. So let's pick it up from the start. What is this thing? Like these discoveries here, you say 4 discoveries. Are those, last time you told me they could be company makers in and of themselves, but are they separate discoveries, or are they sort of multiple showings of the same one big system? How do you see that?
Yeah, so they are geographically separate, but that's it. So there is a thread that ties them together from the IOCG and intrusion related model that we've been using, and so they are all part of a bigger system with effectively, if you like, the same fingerprint. If you just look at them, you would go, okay, charges gold, BBM's copper and gold, Scepters are copper moly, sort of porphyry style. But the point is that what we're actually finding is that if you sort of think about it on a continuum, there are sort of and a ratio perspective, you get N members, which are gold. The gold ratio is higher to the copper ratio, and then you go across the other end, and the copper ratio starts to be higher than the gold ratio. But they're all on those different levels with the copper, gold, moly, silver. All those just ratios change around, and then the alteration system. It's the same alteration system. We have this regional potassic alteration system that's manifests mostly as biotite. And then, there's a tendency when we get closer, we see more sort of potassic feldspars and things like that when we're around the mineralization, and then we get the iron oxide alteration manifest as magnetite and hematite. The hematite is, when we see it, is usually actually like a dusting of the cave feldspars. So it's intimately related, and so at Charger and BBM we've got this hematite alteration, and at BBM it's sort of on the edges of where we start. So as we if we're drilling through that structure, when we're getting closer it's more distal to where the actual mineralization is, but it's still there, right? And it's still part of the mineralizing system. And same with Scepter, like in the periphery, we have, magnetite, and, there's iron oxide alteration. So, it is still there. And I think we'll find more of that as we go along. But, in 2022, when we started to come up with the idea after we first drilled Charger in 2022. And it was that drilling was like the nucleus became the nucleus of that idea when we went off and started to think about these things. And the ground was partially covered by Randgold geochemistry. I might have mentioned that when I was talking to you before, but it was partially covered, and I saw that from the very first day before Awalé had picked up the properties. And looking at these geochem maps, and it's like, there's lots of gold in the geochemistry, but wow, like there is this significant copper, lead, zinc, and nickel anomalism in these maps. They analysed, that was basically what they analysed for, and always gold, and probably 80% of the time they analysed for those 4 other base metals. And I didn't understand it at the time. I I walked around and you know, was seeing that bigger alteration picture, which is not your standard West African fare. Like, you know, I've been working in West Africa for like 14 years now, and so it was immediately evident that, you know, the parent geology was right. So they were I was about to use some so the word is supracrustal rocks. They were the right, you know, they were the same as the other West African volcanics and you know, sedimentary, you know, volcano sediments that you see around the you know, all of the Birimian, which covers, you know, thousands of kilometers. And so that parent geology was right, but the alteration that I was used to seeing around gold deposits in that region, like it was certainly different. And you know, the little bit of orpaillage I looked at, you know, I saw some interesting mineralogy as well, and you know, it just wasn't always the, you know, it's not the standard thing. And so there were a couple of things that were like, we don't understand that now, but maybe we will as we you know, go through our, you know, systematic exploration process. And then so when we built Charger, it was actually that there was, you know, talking, you know, Eric Roth was on the board then, and Andrew Smith, we, you know, was like, wow, you know, this might be an iron oxide copper gold system. And I mean, I approached it with caution because, you know, you don't want to just come out to the world and you know, as the technical lead on the project as I was then, and just tell the world, oh, it's this. And then I've got nothing to back it up. And this is something that actually I drive down on the geologists that work for us as well. And like, we've got this big thing of like, to do all this work and then create, you know, plan their own drill program, do things, and then they'll come up with programs. But I'm like, why? Where's the evidence? Why do you want to do that? And so it's the same thing at that level, is that you don't want to just come out and tell everyone that, oh, this is an IOCG or something like that, without, you know, doing a bit of a deep dive on what an IOCG really is, and do we really have, you know, what boxes do we tick? That we can talk about that. And then so we did that deep dive, and then you know, so then I was, you know, happy to come out with, you know, in the news releases when we were talking about things back then, is just saying, you know, this is a potential new you know, IOCG province. And I think that I guess the thinking is now that, you know, it is a new style of mineralization in the people are talking about now in West Africa. And so, you know, that's a really nice part of the story, and quite satisfying as a geologist as well, that you know, you come up with a hypothesis, and then you start to press it, and it keeps giving back. So you know, the hypothesis is you know, standing up, and you know, because it's standing up, that gives you even more confidence in a bigger system. I mean, these provinces are, you know, they're not confined to one permit. So you know, as that thesis stands up, well, you know, then the regional scale becomes more and more interesting as that moves along, right?
Because I was mentioning with one of the other companies, it's sort of the way I think about alteration, because obviously not a geologist, but I think about it as the breadcrumbs that a system leaves behind that sort of leads you maybe to the main course, if you will. And what you're telling me here is that basically at all of these targets, you're seeing the same type of breadcrumbs. Is that right?
Yeah.
Okay.
Yeah.
Okay.
That's right.
But
yeah,
so
but the interesting thing about it as well is, like, I always sort of in a way tell people that it's hybrid, because it doesn't matter. Like, for me, it really, you can be in these different styles of mineralization systems, and really, you know, so we think that we've got intrusive related fluids as well, but there's probably sort of orogenic fluids coming in there as well. But the key thing is why I call it hybrid is that really it's that structural framework that's allowing plutons to come higher up in the crust and create, you know, dewater and create mineral deposits. And so then so what we're seeing is, you know, BBM, Charger, Scepter, Empire has got quite a lot, has got like similarities to BBM, but in the setting, because they're both sort of structurally hosted and sort of shear zone things. But the way the mineralization is manifest is dependent on the local geology and what's going on locally. So Charger is a breccia system, and we really see that as being driven by intrusions. The Scepter East, for all intents and purposes, it looks like a copper moly porphyry with some gold, and it's hosted within this big granodiorite intrusion, and there's not really an orogenic signature that's sort of saying like that. There are shears within the granodiorite. This has been a debate for Boddington, which is probably an analogue of Boddington's quite similar to like the appearance of the mineralization of Boddington in Western Australia is actually quite similar to the appearance of the mineralization at Scepter East. And Eric, former director Eric Roth, he worked at he was at Boddington in the early years, like 30 years ago, right? So that was an interesting discussion with Eric when I was showing him photos from there and going, it looks like a porphyry, and it was him. He said, well, Boddington looks like that too, and there's always been this debate about can you have a porphyry that is that old, because the crust isn't thick enough, you don't have proper subduction going on, all these there's all these sorts of discussions, but the point is that these are still intrusion related, two very intrusion related things. And then you get BBM, which is an absolute shear zone. It's like BBM's a geologist's dream. Geologists dream about tabular ore bodies with plunging chutes, because they're easy to, in the scheme of things, they're easier to wrap your head around, nut out, understand what they look like in 3 dimensions. A breccia system like Charger is not so easy, and we've had sort of 3 drill directions at Charger trying to figure it out. And the last round of drilling with a 3rd drill direction was we've cracked that really high grade. But the thinking behind that was, we've got this beautiful breccia system, and breccias, you talk to people and geologists love a good breccia, right? And it's something that Andrew Smith always used to joke about, is like, love a good breccia, and because we know that they've been pumped, right? They've been pumped with fluids, and they can get you can get really nice things out of them. So we've always sort of tinkered with our thinking with Charger to try and figure it out, because it's enticing. Right. The fact that it is a breccia makes it on day one makes it enticing, and you can see in the section that we published, that we drilled it in the very first drill program, and got sort of 21 meters at sort of 2.5 grams, and we got these iron oxide breccias and these little chalcopyrite veins and things like that, and got some mineralization, and we drilled all around it. We drilled under it from the same direction. We scissored, and then we came from the north and the south, and we got the right looking alteration. Got a little bit of breccia, not too much. It was like, we're proximal to things, but it's not coming to the party. So in the end, we got other anomalism in that first drill program, and we actually did some ground mag and came up with a structural framework. So that's one example where skipping a step is not a smart thing to do, right? So I'm talking a lot, right? But as a junior company, you need, as any early stage explorer, you actually need cash, and you need to be able to plan out your exploration programs to actually do anything you're doing justice. And so when you're a junior company that doesn't quite have enough money, you can take you can take some leaps that maybe you shouldn't have. Anyway, so we came back and did the mag, and then got a structural framework from that. adjusted the drill direction to go pretty much toward the northeast, and we hit another breccia, a different breccia pipe, which actually in the end came to surface. We had some artisanal mining come in after that. They opened a little pit, you know, as big as, you know, as not very big, you know, I don't, God, you know, 10 meters by 20 meters or something like that. But when we walked down into it after they'd opened up that pit, it was like, wow, there's a breccia, you know, and we could see the big class to the breccia and you know, there was gossinous material in there and you know, all this interesting stuff. So that breccia pipe actually came to surface, and it gave us really nice grades. I mean, we got 32 meters at 3 grams per ton in that breccia. Like, we're really happy. And then we got other hits that were over 50 gram meter hits as well. So, you know, and then but then when we stepped out from there, it sort of, again, it was the same thing. We were seeing similar to what we saw when we drilled underneath that hole 89, the discovery hole. And so we went back to the drawing board again, and we changed our drill orientation, and we got, you know, what was it, 32 meters at 45.7 grams, which is, and that beautiful solid mineralization like that. That's why I say I haven't seen a drill hole like that before in my life, because I've seen high grade drill holes, but not consistently high grade like that is over 32 meters. It's just it's astounding. It is truly astounding, and it'd be lovely if I can drill more. You know, it's like drinking a good wine or something, you know. You want to buy another bottle, right? And yeah, so it's a bit like a drug or something like that in a way. You do want to see more of that sort of thing. But then, you know, these things, like, you know, this is like geology. Exploration geology is hard, and you need to, and it's easy to walk away if you haven't done a lot of good geology, right? And if you don't have that model in mind, and if you haven't layered up all those things, and you're constantly looking at where you are, adjusting your picture, and you can walk away from things before you've got it right.
Yeah, kill the targets. And you're right, you are talking a lot, but in all fairness, I did this to myself because I asked the geologist about the alteration system in an effort to look smarter than I am. But you do mention, it's just I've been looking in different alteration systems all week, so it's kind of top of mind for me. Potassic alteration, typically associated with porphyries, right? And it wouldn't be too unusual to have it would almost be more unusual to have an IOCG than it would be to have a porphyry. And if I understand it correctly, with an IOCG, you'd also need other types of because they're complex ore bodies, you would also need other types of alteration, like chloride and what else? I mean, carbonate and so on and so forth. So do you think you're going to start seeing different types of alteration the deeper you go with this?
Yeah, you tend to get, I mean, these are really quite common minerals. So you tend to get, I guess you tend to get combinations of certain alteration that lead you to think it's a certain style of mineralization. So, you know, with other orogenic gold things, you might get sodic alteration and some potassic alteration. Chlorite as a distal alteration feature is really, really common. That's why they're called greenstone belts, because of chlorite is more of a metamorphic thing. So it's about the metamorphic grade rather than alteration. But then you can find different sort of, but these things range in composition, so they're not always exactly this much iron in the chlorite, or exactly, you know, there's a lot of elements. So the chlorite can be high iron chlorite, and we're getting some study done on it, but it looks like a high iron chlorite that we've got inside the breccia at Charger. So, you know, we range from these, you know, hematite alteration into this high iron chlorite clinopyroxene plus sulfides, but you just get a range of you can get a range of different things, and so, you know, the Ernest Henry in Australia is in the Mount Isa Eastern District, and you know that's classified as a iron oxide copper gold district, and it's got this regional biotite alteration, like it's everywhere. And then you get K feldspar and things like that manifesting sort of where in closer to where the mineralization is. So, you know, the alteration can also be, you know, really very intimately associated with what the wall rocks are. So it's taking chemistry from the wall rocks and then reprecipitating that chemistry back out again as different things. So it's not just completely related to the fluid that's coming up, it's also related to what the fluid's going into. So, but yeah, but anyway, but yeah, so, but there are, like you say, there are like, so, you know, at porphyry deposits, there's a, you know, a range of alteration that you see as your distal and proximal, and a range of mineralogy that you know, sulfide mineralogy, you know, pyrite halo, you know, the chalcopyrite, bornite, you know, coming, you know, as you come in and out from the core of a, you know, a classic porphyry and things like that. So, but you do get that. Yeah, you are correct. But there is also crossover in those things as well.
The geochemical footprint that you mentioned here is also interesting because you're getting quite a lot of moly in this, which is, I mean, I don't necessarily know if it's going to be any addition to economics here, but it is good because as far as I understand it, IOCGs do tend to have a moly geochemical footprint, but also uranium footprint.
Yeah, some of them do, some of them don't.
Oh, okay.
Right. So it's the same thing. Like it, you know, yeah, some do, some don't. And the ones, yeah. So, but and you know, uranium is anomalous in some. We do actually get some anomalous uranium geochemistry and halos around some of the intrusions that we have in the system. But you know, it's not like Olympic Dam, which is actually, you know, I think it produces something like 30 or 40% of the world's uranium at the moment, or something like that. You know, but so it's not the same thing as that, but it's still there, right? And so, you know, this is what I mean. It's like people don't like IOCG terms because it's actually quite a big bucket. There is quite large variation in what actually ends up being mined and how that alteration system looks. But again, it's the same thing. There is this common thread that you can find through all of them, and the you know, the academics that have studied them have come up with, you know, it's not an exact checkbox, but there are checkboxes that take you you know, towards that. Okay, you know, and they're from broader geological things right down into what the alteration is and things like that.
Okay. What's the uranium hosted in, by the way?
What's the uranium hosted in? It's just in the, like, it's with us, it's just you know, it's only 15 ppb, so it's just you know, in the like an aureole around these intrusives, you get this uranium kick that's higher than, you know, significantly higher than background.
Okay, sure. I mean, it's not, because it would start getting strange if it's uraninite or something like that, and if you get a lot.
Yeah, we don't have any uranium minerals. You need much more uranium to get to those uranium minerals. Yeah.
Could you though? Like, could there be any uranium at depth?
Look, we're not really seeing indications that's what it would be. I just think maybe there's just a little bit of you know, it's there in the intrusions that are coming up.
Right. Okay. Fair point. No. Anything else in terms of nasties, like arsenic or something else, or arsenopyrite?
Oh, look, there's very little arsenopyrite. You know, even in the, you know, it's actually not the best pathfinder for us, because quite often in some of these things it's not really around in significantly higher than background levels. When we're getting up towards, so again, that's you know, a lot of the Birimian sort of gold when it's related to these sedimentary things, like in the sedimentary packages, the sediments are higher in arsenic. So you tend to, so as the fluids come through there, they actually pick up all that arsenic, and then you can get more arsenopyrite. So when we're going out towards BBM, we're seeing more arsenic anomalism in the soil geochemistry. And then, well, and then there needs to be an awareness of what the geology is underneath, because the background is higher in those sediments than in the volcanics and things like that. But yeah. So that, again, that's another thing that sort of can be related to fluid source.
Okay, so the geochem is confirming, sort of as a checkbox. The alteration is confirming your thesis for an IOCG here. Well, I assume because you drilled this on a geophysical anomaly on an IP, so I assume the geophysics also confirm it.
Which does the IP confirm? Look, we know there's a lot of late intrusions coming up into the system. We can see them in the magnetics. And then, the IP is more of a local thing, and you can see intrusives as a resistive. If it's more resistive than the surrounds, they really stand out. But if you did a really big picture survey, you would collect gravity data for those intrusions.
Okay. What I'm making here is sort of a checklist, if you will, of IOCG and what you would need to have. Like, so the lithologically it checks out, the geochem checks out, the geophysics check out, alteration checks out. We haven't talked about structural controls, or they're not, they're all along the Sassandra fault. But are the structural controls the same with all these targets?
I'm not sure exactly what you're asking there. I mean, there are very big deep tapping structures in the district, and that would control, and they would be, and we see mylonites and things like that as well, which are formed very deep in the crust. So there are structures around that are definitely very deep, and that belt base and margin structure is absolutely a very deep tapping structure. But the structural framework's built from where things are being, compressed during the tectonic activity. So we can actually see there's a broader theory about, the rotation of where the principal stress is in West Africa. And we actually see that there in our mapping. And so that's what, as things get, particularly where we are, the structure that Sassandra turns and goes to the west really heavily. So things are getting very heavily wrenched, if you like, and it's turning and cracking things open. And I mean, you can, on some of the plutons that are there that are a bit older, you can even see rotation.
Okay.
in the geophysics. So yeah, you can actually see that they've rotated, and that's because everything's just getting wrenched.
So there's quite a lot of pressure that I assume is also good for the alteration system there.
Yeah, that's right. I mean, look, when you turn and wrench things, or what that really does is your faults start cracking open, fluids start pumping up. You're actually creating a pressure gradient. So fluids that are down start to pump up, and create mineral systems. And then if there is, and then in the sort of late orogenic, so the plutons that are of interest for us are sort of late orogenic, and they're so after all that pressure, things relax, and then that structural framework that you've created actually create zones of weakness where these plutons can sort of float higher up in the crust and create mineral deposits, dry out and release their fluids and create mineral deposits.
Okay. Well, you said there at the beginning that you're not sure what I was asking. That's a good thing, because I'm not sure either. What I'm getting to is basically trying to understand how this whole thing fits within the overall if you will, the broader West African craton here that you're on, because I've seen, objections being raised saying, oh, IOCG, that part of the world, how's that going to work? So how does everything that you just told me right now fit within my
Well,
craton?
then, our crustal setting is ripe for IOCGs.
Okay.
So if you look at our crustal setting compared to Carias and an Olympic Dam, it's exactly the same. And they're the same age rocks. That saying that it's not the right crustal setting to me is not right, because it absolutely is. These things are the IOCG provinces like Carias and Olympic Dam are just on craton margins.
Okay. How
Yeah.
come, like, why are you the first one figuring that out? Like, well, why hasn't any of your neighbors or any of the other guys come up with the same thing? Okay.
I don't know. I can't answer that question because the thing is, I think, I mean, especially in somewhere like West Africa, where there is not a huge amount of funding for geologic surveys and all that sort of stuff. Like, you go to Canada and Australia and America, and they've got these massive surveys. Australia's got AGSO as well, so you've got or the CSIRO, sorry, as well. And so you've got these bodies, these not industry bodies, but government bodies that conduct a lot of research, and they get funding to fly these massive aerial surveys and interpret them, and do 3D subsurface geophysics, and when you actually find it, no one thought about an IOCG in Australia until they found Olympic Dam either. So, and it was one of the big drivers when I was at university, like in my early days of university, an IOCG didn't exist. Right? That model didn't exist. And so when I started doing my, honors studies and thesis, it was really quite cool, because I actually started working in a failed rift to do that, and Mount Isa is actually a failed rift, and then everyone was starting to talk about Mount Isa as an IOCG thing as well. So I just got to imbibe all this early days information from my supervisor and other people that were in the geologic survey in South Australia, where I did my honors project and all that sort of stuff. And, it was a burgeoning new idea. And since then, and at that stage, really they were only looking at these Proterozoic rocks, but that's actually grown into, someone this week asked me about IOCGs in like Peru, and they're much younger, significantly younger. It's very younger, it's a much younger crust there, and I actually had to answer I don't know, because A, I've never worked in Peru and Chile, and B, when I've sort of done when we've done our background, it has really focused on the Proterozoic analogs, rather than something in Peru, because it's not the same. There's something different going on there, but I can't answer that. I can't answer that question, because I haven't actually dived down that rabbit hole as well.
Well, they also,
But the answer to the question is that the key answer to that question is, in these places, there's been no studies done, and so it does actually take an exploration company to go in there and start working and go, okay, maybe this is a little bit different.
Okay. So, well, basically, you do have an answer with it's basically saying that, it's for a big part just coming out of your head, basically, and another part is, luck always plays a role in these things, with the emphasis and, of course, what's been coming out of your own head. But they also often say that no two IOCGs are alike. Like, you're not going to be able to make like a perfect checklist for an IOCG.
Yeah, I don't think there's a perfect checklist. Like, there is this continuum again of iron oxide apatite, through to IOCG sensu stricto. There's a guy called Murray Hitzman, who's a famous geologist. He wrote a paper. I can't remember what year the paper was now, but it's got an IOCG sensu stricto checklist. And Andrew and I went through that checklist and went bimodal volcanism, tick, iron oxide, blah, blah, tick, tick, tick. And we went, okay, we didn't tick all those boxes. This is a couple of years ago, but we were ticking a lot of the boxes, which made us sit down and have a beer and smile.
Okay. Well, I hope Andrew Smith is still smiling. What is I'm looking at your fact sheet, and there's a couple of deposits that are mentioned here on your fact sheet, but they're not direct analogs by any means. So what's an analog? What's the closest analog to what you have going on here to maybe help someone who's not technical like me better understand this?
Yeah, this is the thing. Being an Aussie, I think about the Australian things. So I think like Ernest Henry and some of the other things in that Mount Isa Eastern succession are actually quite similar. Like so, you've got Ernest Henry is this thing that's surrounded by huge amounts of potassic alteration, and then you get things like deposits that are called like this one's had different names. There's Stara, Osborne, and they're more like maybe more like BBM, or something like that. There's this iron oxide in the surrounds, and it's more like a folded shears, like a folded and shear zone related thing. But they're high grade. The point is that they're high grade gold, right? So you were seeing that range between that continuum that I was talking about before, with more copper related system or higher copper ratio through to a higher gold ratio, and so that's sort of one thing that really interests me. But the feedback that I get when I talk about that in North America is like, I don't really know what they are because we've never had anything to do with it. So I actually really need to do some homework on analogs that are probably more familiar to Canadian market, but Canadian North American market. But when we started looking and reading and thinking, the Mount Isa things were very similar, as closest analogs. But in the scheme of things, Charles Baudry, he sees lots of similarities between what we're doing and what he did in when he was working in the Cariash. Right. So he's actually worked in the Cariash, and when I talk to him about what we're seeing and he looks at what we're doing, he can join the dots.
Right. What I'm also thinking about here is, and I'm just going through your website because it's something that I also wanted to ask, but looking at the plan package that you have, and where the black box is basically your JV with Newmont, all the other ones are 100%. They're all along this what you call fertile structure. What's the probability that this system that we've been talking about this entire about an hour or something like that? What's the probability that it spills over into the 100% permits, or maybe the other way around? What's the probability that it doesn't spill over into them?
I think the probability that it doesn't is low, because you're on such a big mineralizing. We think we're on such a big mineralizing system. So I think that probability is low, but scale, how big they're going to be or anything like that, you actually don't know until you start doing the work. But I think from a scalability potential, yes. How big they're going to be, I'm not sure. But just going a long strike in that system, these systems are big, right? So I think there is that kind of potential. And there's a good chance that we'll get more. We'll be, when we start working, we would be doing more. We would be drilling and getting some success. But on the actual size, why wouldn't you find more of the same as what we're finding now?
Right.
We're in 400, we're in something that's 30 kilometers by 33. We'll be working in something that's 33 kilometers by 12 kilometers, and And these systems are way bigger than that, and they host multiple deposits within these systems. So if you look at the Carias province or the Olympic Dam province or the Mount Isa Eastern Succession or any of these, there's multiple deposits within much larger, hundreds of kilometers we're talking about. So, yeah, why not? Why not the same thing?
Where I'm coming from with this is still within the topic of what are your geological analogs? Because again, here on your fact sheet, there's one of your neighbors is Lulu Gunkutu. That's 17 more than 17 million ounces of gold equivalent in their tier 1 asset, right? So what I'm thinking about is, what does it take for you to make this a tier 1 project, and what are the probabilities? Do you need the 100% permits? Can you do it only with Newmont? And that's along the lines of what I'm thinking here.
Oh, I think I think for me, the idea for me is that we're proving the pudding with what we're doing with the joint venture. And so if we're onto something on the surrounding properties with our own money, we should be able to get funding to keep chasing that with our own money. And not have to lose too much of the property too early. And that's always a problem with junior companies. You can have really good projects, and the capital markets aren't reading from the same book. But yeah, so I think we've got the opportunity to do that now.
Okay, but and then, do you need that? Like, do you have to go to the 100% permits to get to that tier 1 status, or at least have a decent probability?
Oh, look, if you mean just within that JV properties, yeah, I think there's potential to be tier 1 status in there. That's for me. That's yeah.
Okay, so knowing all that, how does your approach, seeing all these assets and knowing what you've just told me, how does your approach change moving forward? I mean, 25,000 meters of drilling planned for this year alone. That's almost as much as you've drilled over the last 3 years, but then crammed into 1 year. How do you manage that? How do you split that between all of the targets, BBM, Empire, Scepter, Lando, Charger?
Right. So, okay. So look, I guess the way I look at it now that we sort of feel like we're definitely onto something at BBM, and it really looks like we're onto something at Charger. The bulk of the budget goes towards those. And then there is a percentage that goes towards, we're doing some IP at BBM to just see what it looks like with IP and see if we can find extensions. BBM was unique. The geochem talked to the mag, the interpretation we've done in the mag so beautifully. And then the mapping that we did was we don't need to spend money on anything else, and we just walked up and drilled into the structure with the 4 holes that we drilled. But now sort of when you go along strike, you're sort of a bit more undercover and all those sorts of things. So we're trying to use some IP to figure that out. You have budget going into BBM extension or satellite targets, if you like, and then tickling or coming along behind with a bit more drilling at Lando and a bit more drilling at probably potentially some deeper holes at
Scepter.
At Scepter East, yeah.
Yeah. Well, what does that mean? 800 meters or deeper, like 400 meters?
Let's do the IP first, and I'll tell you.
I wish you could tell me right now. I like deep holes, but
I think it's going to be more than 400. And who knows how deep I don't know what but let's do the IP and let us nut that out and plan up the holes.
Okay. Did you first think that Scepter East might be sort of the center of this system, and is that thesis evolving or changing, or how do you see it now?
Okay, so it might just be geographically in the middle. I don't necessarily think that intrusion is like the driver. It's not the driver of the entire system. It's part of it, but it's not like the central driver of the other mineralization around, I don't think.
Mm.
But you know, that's just my thoughts at the moment. But you know, it might be that it just is geographically in the middle, and we've got and if we crack it and get, you know, some decent, I mean, the copper grade, the average copper grades that we're getting now, they're not high enough to make it exciting. But that's why we're doing the IP and thinking about those deeper holes, because it's so big, right? So it's really big. Like, you know, you're talking, you know, 500 million plus tons of material if you can actually get it up to a grade that becomes a little bit more, you know, that starts to become more interesting to pull out of the ground.
Mm. But then in all fairness, again, you know, maybe a year ago, Charger wouldn't have looked that interesting with the grades either, and then now you drill this.
And that's why the grades we were getting at Charger, you know, 30, what was that, 32 meters at 3 grams a ton, and close near surface. That's you know, diggable. The widths probably weren't quite right then, but you know, that's enough to keep you excited and or interested. But it's the same with that, you know, 358, or you know, that we drilled a 365 meter hole or something like that and got 358 meters at 0.34%, you know, 0.34% copper equivalent, you know, and that's enough to keep me interested. Like, that's enough for me to go, okay, we actually need to, you know, we don't walk away from this now. You know, we've got to keep looking at it. And again, we've only drilled a handful of holes. And you know, and with that, what I was talking to you about before, about 30,000 meters, that's 30,000 meters in 300 holes. So the average depth is 100 odd meters, right? You know, we haven't really, you know, now that we believe that we're onto a system, we haven't really drilled on and really drilled into it yet, you know. And I think, you know, so that's an exciting part of the thing as well, is that we haven't really sort of been pushing deep many, you know. I think the deepest hole is sort of 300, that I think that probably is the deepest hole, 360 meters.
The one at Charger?
At Scepter.
Oh, the one at Scepter was the deepest, because this at Charger.
Yeah, I mean, the mineralization, I mean, it's only a 240 odd meter hole. That one we just reported, you know, and the mineralization was from 165 meters down hole. So we're like 120 meters vertical. We're 120 meters below surface where that mineralization started. You know, it's you know, we haven't really been looking deep yet either. You know, so when you you know, you're talking about, is there tier 1 potential? Yeah.
It's interesting because you're reminding me. So the first question that I wrote down as I was prepping for this interview was like, what's the catch? You mentioned there's no nugget effect. It's continuous. It's close to surface. I mean, good things don't typically come to me. This has. So what's the catch?
I don't know. You might have got lucky. I don't know, Antonio. I mean, I don't know. I mean, you know, we're about to start drilling. I actually just went through the drill program this morning with the guys online again, because we talked about it just before we went to Zurich, and you know, decided we should make some adjustments to the program and things like that, and so. And you know, that's for like BBM Charger, and you know, we've now made more adjustments today because of, you know, what we know. And I said to the guys, "Are you nervous?" And they're like, "No, we're excited." And I'm like, "I'm excited too, but I'm also nervous because of the same thing." I'm like, "Shit, what if something?" But it's just. I keep telling people that the only thing the thing that gives me confidence all the time is that pressure on the project, and it's just, you know, giving a pile back, you know, and so I don't, you know, if that gives you any confidence, you know, maybe that should, because we're pressing it really hard. We're, you know, BBM's is like a gift, and it it really is. It really is a proper mineralized system. Like it's not. There's so much alteration, fluid flow through this system that it's exciting.
What this conversation is indeed giving me more confidence, definitely understanding everything better. I've written down a lot of things. We didn't talk much about the geometry of the mineralization. That's sort of the second thing that I wrote down, because looking at it, there's sort of both BBM and Charger, though different, they stand sort of vertically, if you will, mostly.
Yeah.
Yeah, so talk to me about that. I mean, the geometry of
Yeah,
the
sure. I mean, look, the shear that the BBM's on it is sort of 70, 80 degrees, depending on where you are on the shear. There is a plunging chute that goes down at about 40 to 50 degrees. But the drilling that we've done, we've actually drilled. So we've drilled into what we thought was the footwall and through it, and the footwall was the metasedimentary rock. So we get a bit of weaker mineral, but the mineralization really dies off there. But we drilled sort of right into it a little bit, and then we just got a sniff of another intrusion sitting behind, and we got mineralization in that. And the guys were aware of it, but we were very budget conscious. Like we knew that we had, we could drill pretty much 4,000 meters, and so to actually keep drilling, we would start be eating into the budget for like Charger and stuff. So so we'll be testing that potential footwall mineralization as well, which will significantly increase shallow volume. And if you're worried about it being sort of quite steep, but there's plenty of steep ore bodies around the world. I mean, the strip is a bit higher, that's for sure. But if there is that footwall mineralization, well, then that brings that strip down as well. So I'm not, and the grades are pretty, the grades are all right. There's people around mining less than 1 gram, 1 to less than 1 gram ore bodies on things like that, and so the grade's pretty good. So I don't think people should be too stressed about the strip at this stage. And the interesting thing is that the guys have seen some specks of visible gold in the deeper holes. So we know that we've got a visible gold system. Maybe that's another maybe in front of that. But maybe we actually get gold starting to kick in deeper in the BBM system as well. We know it's there. It's there at Charger. It's there at Empire. So why not at BBM as well?
But what's the significance really of visible gold here?
Well, it's just a kick in grade. Like you really, you like I said, like, so where the guy, at that sort of 5 to 10 gram range, you might, if you look really carefully, you might find a few specks, but generally, and in most 2 gram ore bodies, you'll never see it at all. So, when you start to get it, you start to think of, well, I've got a few specks, maybe it's 5 to 10 grams per ton, and then a few more specks, and then, okay, so maybe we're in the 10 to 15 range, and then it's just an indicator that you're potentially getting into high grade rocks.
Okay. But it's not an indication that you could get into nuggety stuff, right? Because again, the main thing that attracted me, typically when I see headlines like this, actually, I would get
always nuggety.
Yeah.
But it's like there's nuggets in Charger, but there's also a really fine dusting of through there, which is giving us that really high grade. I think that's that really high grade.
Yeah, because again, I think the fact that, and it's in one of the highlights, I believe, where it was on Twitter or something like that, where you say it's no nuggets, it's continuous. That's kind of the thing that really caught my attention. I don't know if that's
so what I mean
significant.
is no big nuggets. Like there's no 1 meter at a kilogram per ton in the middle, right? That's carrying normal gold grades at 1 to 2 grams per ton or something like that over, something that's running normally 0.5 to 1.5 or something like that, and then you get this big, 1 or 2 kilogram nugget in the middle of that interval, and then really when people do their 0.2 or 0.5 trigger, that nugget in the middle just smears out over 50 meters.
Right.
But really that 50 meters is just your standard one or, a couple of grams, 0.5 to 1 or something like that grams per ton with this big. But this is not. I mean, I think that it's all, most of it's above. I think there are about in there. There's 2 intervals maybe or something like that, 2 or 3 intervals that are sort of in the 5 to 10 range, and then there's only one that is less than 5 grams, and that's the second to last. Like it's the 30 to 31 meter is 1 point something, and then it goes 6 grams, and then and that's that 32 meter interval. It's beautiful. It's beautiful with that, then with that sort of 50 to 250 sort of gram interval all through the center. It is just pretty. It
Right.
really never seen like that.
I also always assume that the market is smarter than me, and given the reaction to stock price, I assume that the probability for this occurring in a vacuum is also low. Like this is not just a random intercept. Someone planted, 50 meters of a little bit of gold there. Well, a lot of gold in this case.
Yeah.
But the holes above it didn't hit anything. So yeah, I mean, talk to me a little bit about that. Does it occur in a
Yeah, I
vacuum?
think the breccia probably just didn't quite get to surface. I just, it sort of maybe dwindled out, and they don't behave like straight always. So, maybe it just sort of, and then we just got that tiny little bit manifest at surface. But I think that's probably, really what it is. The guys, I can't answer that 100% sure, because like I said, that's the thing. It sort of was trying to get to surface, and we got that all the right alteration and some quite thin intervals of breccia in the holes that went under, or thinner intervals of breccia in the holes that were sort of didn't have the juice underneath. And yeah, I just think it just sort of, that's how far it got when it was pumping its way up.
Right. Okay. Andrew, I'm gonna let you go and say hi to your kids like you haven't done in the last week, I don't assume. What is
For a total of 2 hours up to this morning.
okay, 2 kids, right? Boy and a girl?
Yeah, that's right. Yeah.
Okay, so 1 hour each. That sounds decent. Yeah, it's enough. What what and when is it gonna be when you announce the next news release? What are we gonna see in it, and when is that gonna be?
Well, we'll have the geophysics come out at some stage. We do have some results for Lando to come out. Lando's scout drilling, and I'm not expecting to shoot the lights out with Lando yet. We're still trying to work out how it works. It's such a beautiful footprint, and I think it hasn't, that first few holes that we announced. It didn't quite give up what it was, but I think we just need to keep plugging away at Lando, because it's such a beautiful big footprint, and based on what we've been seeing, it'll give it up at some stage once we figure it out.
Okay. How many meters do you typically get? Well, I'm not gonna go that route. I'm just gonna ask you. You're starting to drill in mid-April. How long until the first assay results come back from that?
So usually, well, we got to drill the holes and then submit them. So, you're looking at maybe 3 months from now, by the time we drill, submit, get the results back.
Right. Are you last year you were sending them to where are you sending those assay results?
We're using a company called Intertech, and so no labs in West Africa do multi-element, ICP analysis, which we need because we've got the copper, gold, moly, silver kind of system. So and other things, as well, that we like to see. So we can do fire assays in West Africa, but we can't do all the others. So it all gets prepped and sent to Australia.
Okay, and you're not changing labs. You're still doing the same thing. So like a
Yeah, I mean, it doesn't matter which lab you use. Something like that's going to happen. It'll get prepped and sent to South Africa, or prepped and sent to Canada, or prepped and sent to Australia. There's a lab in Europe that does it as well. But yeah, that's pretty much. you just if you want an ICP suite for multi-element analysis, it goes offshore.
Right. Okay. Fair point. And then are you thinking MRE by the end of the year, or is that too early to see?
Too early for MRE at the end of the year, but in 2025 we might have done enough drilling for an inferred resource.
Okay.
It definitely, we had easily a BBM inferred resource in sometime in 2025. So this drill program is seeing, testing grade continuity and things further out and down deep. And then sort of once we got line of sight on what we think we might be able to get out of it with infill resource kind of drilling, we'll start, we'll be doing that.
Right. Okay. I'm gonna stop talking now. Let you go. What am I forgetting to ask you here? Last question.
We touched on it, but I can summarize if you want.
Sure, go ahead.
Big mineralized system, geographically individual deposits, but they all stitch together as part of that big mineralized system. And a mineralized system this big is not confined to one permit. So, we're really interested in adding value in our surrounding Awalé property.